Good morning, traders. How we doing out there? Welcome back, of course, to another TTP live trading here, looking into the market. And right now, I'm seeing some small caps move, but the big caps, they got some issues here, right? We got to talk about what's been going on, and of course, it seems like this is a Trump-induced correction, of course, with all the tariff conversation. And the Trump wars have returned, right? I'm calling them the Trump wars versus the trade wars, but it's the Trump trade wars, of course, as the tariffs get increasingly. And we just saw now the battle back with China, right? And of course, the increases there not going to be helping things. I think this is something that we got to actually start taking a look at. I know that this seems like a market correction, but at some point, we got to be a little bit careful. We're breaking through lows. We just came out of some lows. We just worked our way all the way back. Now we're going right back down. This could be the start of the break of the bulls here. We'll see what happens, guys. I'll tell you one thing. The bulls are starting to feel it. And even myself that have been trying to stay on both sides, have seen the up and down action lately. We got to take a look into the market. We got to find where the stocks are trading well right now. There's a lot of back and forth action right now. Let's get to the action. Let's take a look at what the charts are seeing right now. Of course, we'll talk a little bit more about them, and we'll take a look at some trading action. I'm watching right now small cap names like WINT. I'm watching Mass. And also looks like Okta, of course, had some reports that we'll talk a little bit about that one. CAPR, we got to get into. And, of course, we got some earning stocks. We got Target to talk about. We got Best Buy, two retail names, big boys, and Target giving some warning. So let's get right to the show. Let's take a look at what's going on in this market right now. Then we'll dive into the playbook. We'll take a look at what I'm looking in the market. And then, of course, the Sunrise Report, where we get into what stocks are moving and why, of course. All right, so let's take a look here. SQQQ mentioned in the chat, and I agree. Yeah, that's definitely something to keep your eyes open for right now. I'm looking at Mass and other names in the small cap, the little small boys, right? I'm looking at this one as a potential runner today. I think this is a nice looking setup. I did not get in a little bit earlier today, just trying to be a little bit smart on that break. But I mean, could I played it? Yeah, I could have played it. This first little kind of flagging pattern here, and you could call it a pennant or a symmetrical pennant, symmetrical triangle, right? You can see here the kind of the lower sloping lines. Was wondering if we were going to make one more attempt to 3. We did not get that attempt to 3, and if anything, pushed off of the 330s, went up there to 373, and now have pulled back to the 345. So this is just one on the radar in the small caps, as I think those are some to keep an eye out for. TRNR still hanging out and hanging around, guys. Yesterday, this one broke down in the afternoon, but it's hanging out this morning. Will it get back to 3? I don't feel like it can, but it's one definitely to keep your eyes open for. All right, guys, NVDQ, of course, showing up now, and this is interesting. This is the inverse NVIDIA, so pretty much shorting NVIDIA, twice the leverage, right? And this has been just ripping and ripping. We'll see if it can continue making moves. The other thing to think about is that this is a $3 stock. So when it's a $3 stock, what can that do? That can make it more attractive for kind of the bigger gains or bigger volume to come in there, searching for that move, right? We'll see what happens with this one, almost to 4. And there's a big resistance here. So let's see what happens today with the overall market. And I'm not saying that the market's crashing down today. I know that it seems like it, but I think these are the important days where you could see some bounce. And I think that you have to play it whichever way you want, right? You can either start to short some stocks or you can play the bounce. There's really no one way of doing it here. I think it's all more of a matter of you think things will continue, right? I don't think anyone knows right now. And the big part of that is we didn't even know that the tariffs were going to be set. And we didn't know that additional China tariff was going to be set. And this just shows me more and more how I think what's important here is focusing on Fed conversation, because we have a huge job report that's coming out on Friday. And I think that that could actually cause the Fed to switch. And what am I talking about on the switch there? Well, I'll show you guys exactly what I'm talking about right now before we get into the good stuff. I think this is important because this is what's going to determine if we're going to get the rally back. I don't think it's going to be just because the stocks come back. We need some assistance. We need some help. It's going to be some Fed help. That's the only way this is coming back, guys. So right now there's a 11% chance of a cut. This has moved from just a month ago, it was at 16%, then a week ago at 4%, 1 day ago at 8%, now at 11%. Watch how this number changes. And this is the one that I'm going to tell you guys. I think it'll catch some traders by surprise. I think we got to continue to watch to see if that 11% turns into closer towards 50%. Have to wait and find out. A big part of that will be the jobless claims jumping to see what happens on that. We'll see what happens on Friday. And then another thing to look at will be just the downturn in the market, right? Can they save the market by doing some rate cuts? All things to be had. And if you look at what was struggling in GDP, because that's another thing that came out yesterday, right, was the revised GDP conversation. And I think that's very important. It's nothing small, guys. I think that's something that you got to take a look at. I put one out on Twitter. I just retweeted Liz. So let me just go ahead and give you guys that outlook here so that you guys can take a look at it and tell me what you guys think, right? I mean, we can take a look at it here, of course, and I got to give her a shout out, right? I want to bring her on, and I'm going to send her this video because I think it's important for kind of analysts and different investment research, right? Well, hey, Liz Young from Liz Young Thomas, she's the head investment strategy at SoFi. So shout out to SoFi out there. And she's staying here just like that. Atlanta federal GDP now modeling was a cut for Q1, now showing an estimate of negative 2.8. So this, of course, showed that the consumer spending or equipment investment and no growth there. And I think that's exactly what we're seeing here. And it's very important to catch that. I think what we need to be looking now to see is what happens from this, right? Look at the quick turn that we've been seeing in the market. I know a lot of people thought that the market would never crash, it would never have a recession or things like this. I think what we're starting to see is the consumer start to break here. And if the consumer is breaking and the investments are starting to kind of shrink, what are you going to see? Well, you'll start to see also kind of private cash and venture capitalist cash start slowing down. Another thing you need to be looking at is, will some of these AI names start to really crash? Because if that happens, it's going to put the scare in spending in AI. So those are all things that we need to be asking ourselves and looking to see what happens. All right, guys, that's going to be enough on the environment outlook. But I mean, just take a look at that, right? I mean, this was it 22 hours ago, and then they gave an even worse impact. And that's what's definitely hitting it, right, guys? So we'll see what happens here. Can this bounce back? And we'll have to wait and look at, guys. Mitch, should I look at gold? Well, the classic thing would be to look at gold, right? As just a hedge inflation and a kind of a safety trade. But the truth is, I can tell you from my experience in trading since 2018, and that's crazy, coming up soon on 10 years really quickly. Gold is not what it seems to be. It's not an kind of a trade to go after when the stock market comes down. I have seen that has not worked out in the past. I think it's common for traders to see the market go down and instantly think gold. Well, the truth is, yes, it can have an impact. It can get a nice little lift with the market coming down. Why? Because traders sometimes go for gold to just stay with inflation, right? Stay with the asset prices, less asset depreciation that you'd see in gold. But the truth is, I don't think this is a trade that this is as easy as that, right? It's not just grab gold and see if it goes up. I think this is one that you can watch, like GOLD is trying to make it back through the 18, but it hasn't really made a breakout. So just keep watch. I think I'm also watching copper in the materials, and that's not looking good either, right? So all these materials are dropping fast and not helping things. All right, guys, we'll see what else is out there. Mass pulling back there to the 335s, now getting a little lift off the 340s. Keeping an eye out on it. All right, let's get out of that conversation, out of the overall market talk, and let's keep it going, guys. So what I want to do now is take a look into the playbook, see what I got up my sleeve, what I'm looking at in the market, and you guys out there, let me know what's on your playbook today. What are you trading? Let's take a look at what I'm looking at. All right, traders, this morning it's going to be a tough one on the playbook because to tell you the truth, I'm a little bit conflicted in different ways. They're conflicted in the way that I am looking to see if maybe the downturn continues, but I'm also keeping an eye out to see if anything else happens here. All right, guys, trying to consider if I take this trade in mass right now. I got the opportunity to trade it. It's off the 338, the 347s. Will we get a pop back towards the 380s and the $4 breakout here? I'm looking at it, guys. It doesn't look bad. Volume starting to come back in here. Let me see if I can get a shot on this. I'll put up the screen if I do take the trade here. But looking at the playbook here. So let's go to the playbook first. Then I'll focus on the trading action. If I miss it, hey, so be it. I mean, I just don't want to take over the trading hostage here. But you guys smash the like or let me know in the comments if you guys want me trading mass here. It's a good looking stock right now on this 350 look here. I kind of like it, guys. It's just more. I just told you guys I would open the playbook. So, hey, that's how it is here. I'll show you guys the play at least. Here's the setup. I like this setup where it just reclaim this kind of 40 area. So you get this trend line look where you get this reclaim right now. And so as long as it can kind of hold this kind of 340 area, it looks good to pop towards the 350 and then get the move. We'll see what happens there. Let's get to the actual playbook, which is XLP. Let's take a look at what else is moving out there, what we can take a look at here. XLP, of course, is your consumer staple. But what I talk about here is to take a look at what's leading on the RSI, right? So we're looking into the XLP area, and we're just trying to catch to see what is doing well. Well, one name, of course, that is doing well is KVU. That's one name that you can look at that has been getting a nice little lift here. Monster continuing to push. TAP. We got Coca-Cola continuing to push there. Philip Morris, tobacco doing really well. Confectioners doing well here also. So keep your eyes on trades like this. This is not something that you look at often. What about a Colgate Palmolive, right? Just got a nice little lift, decent gap that just filled already and kind of holding strong here. You got Procter Gamble also lifting there towards 1677, right? There's some different names here that we can watch, like Clorox, right? So there's a bunch of names to watch here, but I'd watch the household personal products personally. I think these are the ones that have the best outlook right now. And I'm watching the daily chart and it looks strong. We'll look to see if we can get back there to the 3,800. But take a look on the even the weekly MACD starting to cross as it's just showing strength in the last 3 weeks. We'll see what happens here in household products. Let's go. Let's go. I got shorts in place for 440 and 460. Is that on mass? We'll see what happens with mass. I'm trying my best not to stare at it because the next thing you know, I'll be trading it. And trust me, I would be trading it, and I will be trading these smaller names. Just give us a second here as we get through the playbook. Let's get to the next one here as I look at a long on Tesla. And look, I put Tesla long, but Tesla is one that I'm looking at, guys. Why? Because we're starting to get to that point where we are oversold. It's not extreme oversold. So that's one thing I will say. If you take a look at the extreme here on Tesla, it's usually down here towards at least 14, I would say. So we haven't been to 14. We've been down here towards about 20 on the RSI, and we get a little bounce after that 20. But another thing that I'm starting to see is this is starting to try to make peaks back, right? Like it makes a move back on the trend line, but kind of fails. This is what I'll be looking to see if it actually crosses over. If it can cross over, start making its way to 50 and 60, that's what's going to be looking really good here. But I think you got to be careful, right? Because it could still make that move to 14 out the gates here and cut down a little bit further and then maybe come back during the afternoon. I think this is one that you got to be careful. You got to try to ride the trend when you catch it and take some profits along the way, right? That's one thing for Tesla that I can tell you guys. This dragon will run you over if you give it a chance. Looking for a red to green action out the gates. We'll see what happens. This is strictly a day trade. No signs of a bigger comeback just yet, but something to take a look at. Another one, if tech wants to come back, is Intel. There's enough rumors out here to get this stock moving. And you can see this one above the 60, right? Like I just told you guys, right? Like, and this is just pulled back just below the 60. So let's take a look to see if it wants to make a ride back up and get back there towards the 90 or 100. It needs to catch some love right here and start working its way to 25 quickly. But this is all more about to do with the overall market dragging it down right now. Of course, it's had some really good rumors on strengths within partnerships with NVIDIA, AVGO could help it get off the floor. What it needs is that market support, of course. All right, guys, that's going to do it for my playbook this morning. We can take a look at different stocks. Like always, you guys can catch me on Twitter, catch, of course, Trade the Pool, and catch our shorts, guys. I think that some of you guys are missing out on our short content. So I do want to let you guys know a little bit more about that. And if you're not watching Trade the Pool, you're not catching these shorts, I mean, you're missing out on great shorts, guys. We just put out 2 really good shorts that I think awesome. Part of it is a you guys the link here. You guys do me the favor. Hey, hit this link and hit the like button on this to show me that you guys appreciate all the love that I try to show you guys here and show up every day, pushing us forward. So there's the link, guys. This is the recent short that I'm trying to get up there. I'm going to actually put these on my Twitter also. They're really good shorts that have been pulled from the show and really good insights, guys. This is all about the 4 stages of traders. So if you're a trader and you want to know what stage of trading you're in, well, click that link and you guys tell me, what stage of trader are you right now? Are you in the losing stage? Are you in the survivor stage? Are we in the lunch trader? Or are you thriving, which is what I want to hear, of course. But hey, like always, it's not easy, guys. I've been really doing well lately, right? But I also have been running into a little bit of a rut with the downturn in the market. And why is that? Well, maybe it's my going away from the VIX, but that's okay too, right? I think another thing to think about is that sometimes small caps come in and out of favor. And in my funded account, I feel like they've been out of favor. We're getting like maybe 1 or 2 runners right now. We're not getting 5, 6, 7 runners. And I think that this is an important thing. With small caps, you got to be careful. You got to be small. You got to wait for the bigger move. We'll see what happens here. Let's go take a look at mass here. I'm thinking about taking at least 1 shot here. Let's see if we get it and get a nice little trade here. All right, guys, I'm going to go ahead and take the shot here. I'm going to try to get in here right now. There you guys have it. Just got in there. Going to hold off the 340s and just hold really tight here. Look for a nice little move here. I'll show you guys this screen right now, straight from the platform. Let's go ahead. Let's take a look here. Right here. Is it on this one? Yeah. Boom. I got you guys. It's coming up right now. Long on mass here. Let's see if we can get this back above the 350s. This has been looking good, but need to stay lift off really quickly here. If not, I'll cut it around the 340s there. Don't want it to come back down to, let's say, to the 330s because it could come down to $3 here. If I lose $10 here, hey, so be it. But if it breaks out to 4, I want to take the small little gain here. Let's see if it really just starts to get moving here. Above the 360s, I could add and look for the bigger win. Let's see what happens here. Nice little first pop in action. Nice volume that came in with it. Now let's see if it really wants to make the move into 9 a.m. All right, there's a little lift there. Now we're looking a little bit better here. In a second here, I can add as we start to go to the 360s. I'm going to look to add and then start to hold closer towards the 345. Let's see if we can start to get this really moving here. You can see the size that's blocking us right now. It's right here on the 350s. It's 9,000 shares. It needs to run through. But I also see that there's some certain sizing starting to go here. You can see it right there on the bottom, the 350s, right? 350s are starting to get bought. I want to see 350s show up here with some good sizing and this block here delete, right? So pretty much get taken out here. We want to see this go down to 5,000, 4,000, 3,000, 1,000, and boom, we go. So let's see it happen here in real time and broken down right here for you in Money Mitch on Traders on TTP Live, right? Let's see it. Let's see it, guys. Can we get the move here? Back down through the 340s. We're out of here. But if we can just take that 360, we're looking good here. There's that 340s look here where we're going to get a test there. Of course, we can hold to like 338. We can let it test 340s. That's exactly what happened there. Let's see if it recovers back. Don't want to add on this name. If I lose small, and I look for the lift off during the open. All right, guys, we'll see what else is out there. The Q's still kind of dragging, guys. It just doesn't look good in the market right now. 5-minute chart looks great, held strong on the VWAP, says Izzy. Yeah, I don't mind it at all. I think this is one of the names that could have the move today. It has a decent size of volume. It's traded already 11.10 million shares. It's a nice $3 stock. It's in the range of what the gurus like to look for. So let's see if they can take it. Another thing to think about is it could do a liquidity kind of test here and then actually make the move. So you got to be willing to maybe let it go and then get back in. That's the way I'm approaching it right now. I'm willing to let it go. That's why I'm not sized big here. In the open, I'll look to get more closer towards 200, 300, even 400 shares on this account. Just right now, 100 shares, as I'm just trying to protect myself here. All right, I'm going to cancel this alert because essentially that alert is for later on, and I don't want it to trigger, and the next thing you know, I'm not focused on the trade. Let's see what happens here, guys. You guys can also see my projected balance now in the negative. I went up like 150. This is the funded account, full transparent. I'm always going to keep you guys into it, right? Of course, daily losses is a 300 limit, 900 max drawdown, so I don't have to stress right now. Just got to keep playing my game and see what we can run into. All right, there's that downturn towards 40s that didn't reclaim the 50s. So at this point, that's where I need to see quickly come back, that 350s and then a break of that. If we don't get that 350s breakout, then I can just let this one go. Let's see it go. Let's see it attempt back to 350s here. And one thing's another thing, right? It's hit 350 here. It hit 350 here. So on the third time, I would really want to start seeing this get the lift off and then maybe pull back to 350 after that lift. We could still get that takedown back towards 335. So just be careful out there, traders. All right, we'll see what happens on this one. Of course, we're going to start the show right now at 9 a.m. So if you guys see the show starting up, well, you guys know I'll keep trading it. I'll let you guys know exactly what happens here. Let's see what can happen in the market today. I'm looking to see if we can get ourselves a rally before the open here, as I know the Bears are in here and the Bears are singing in the street, and even the Bulls are starting to feel a little bit defeated. That's something to keep an eye open for. We'll see what happens out there, guys. 339 starting to hit. I'm about to get out here. I think we might spread out and maybe make a move back towards the 350s, but I don't want to risk too much here in the pre-market. I told myself, be smart in the pre-market. There hasn't been many runners in the pre-market as of late, and that tells me something. That tells me that we need to be more in protection mode and look for bigger runners during the market here. So there it is already on the 339s. If I see 338s, I'm pretty much going to get out here, guys. There's the 338s. Let's see if it actually hits one trade on 338. So there's 338.5s. It's kind of holding in there right now. Let's see if it can recover that 338. If not, all right, there's the 337 and 338 on the bid side. So I'm just trying to get out here right here. Let's go ahead. Let's just get out on the 35 there. We'll take the $16 loss there, which is nothing on this account. It could still reclaim the 350. I'll be watching for that out the gates here to maybe make a bigger trade and get the cash. Let's kick the show off, guys. Let's do it. You guys know where you're at. It's, of course, Trade the Pool. Let's get it started. And there's some big, big things up our sleeves. Let's keep working, guys. Let's see what we can come up with today. Hugo wants 200, baby. You ready to get back to the trading action?
You aim, you shoot, and make money.
It's going to be a great day. You guys know where you're at. What up out there, traders? How we doing? Let's go ahead. Let's get after it. Let's bring on the man himself, Michael Noss. How we doing this morning?
Doing fantastic. I was listening to you earlier.
Yeah.
I'm with you. I think a bounce off the open is something that would probably hurt the most amount of people, so probably make the most amount of sense.
Yeah, and that's the hard part, right? Because the truth is that the market's been trying to break that mentality, right? Break that trade, right? Which
Mhm.
is the dip buy trade. And you keep seeing traders take it, take it, take it, take it, take it. Now it could be the time that it actually works. That's how the market is, guys. So I think you have to be nimble here. I think you have to keep looking to see what happens. Of course, another thing that I think happened there is just the overall bearishness. And are the Bulls starting to feel capitulated, right? Are they starting to feel the pressure? Even they are starting to start showing some weakness. I was noticing it in the Twitter feed. Even the Bulls, even certain Bulls, starting to calm down their bullish sense that they came in with at the beginning of the year, right? So I think that's just something to be thought about. I do feel like today could be one of those days where the Qs can just rally all day. Why? Because there's not an expected negative news today, but there's also an expected Trump speech tonight. So don't
Mhm.
miss that, right? And you know all how things love to switch in the market. We can easily go from fear and panic to all of a sudden Trump says something tonight and we're back into the ripping rally, right? It maybe not a rally all the way to the top, but it doesn't mean that things can't be different by tomorrow, right? And so
Yeah.
I think you keep an eye on that, especially as a day trader, right? Swing trader, position traders, I think even they are starting to get to the point where they're being concerned. Why? Because now we're starting to see some deterioration in the overall market, not just certain tech names, certain names really starting to come down. And I don't know, man. It's just those GDP numbers, of course, a big scare. Consumer consumption starting to slow up. I kind of expected that in the beginning part of the half. The truth is the consumer broken? Those types of things you need to be thinking about. And of course, housing issues. And I think this is normal though, because we were told by the Fed that they were going to do all these cuts when they first did that half cut, right? And
Mhm.
people got excited. They were like, okay, so now I can finally go buy that house that I've been looking at. And then he said, no, 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 hold on. We're going to put it on the sideline. So guess what people probably did? They're on the sideline too. So just things that I'm thinking about. Let's get to the market. What are you seeing out there, Michael? And what are you seeing right now?
Over. So yeah, you were talking about real estate. So I just brought up RWR, which is a real estate ETF. You can use XLRE, and they both look the same. Yeah, so real estate creeping up there. It's looking positive. This is going to move inverse with rates, which are finally coming down. So rates have been coming down for a long time here, which means that bonds are going up. And this is just the 200-day moving average. So bonds are at the 200-day moving average. Rates are moving down. Real estate prices moving up. When it comes to the overall market, right, looking at the SP 500 here, we're back at support, right? So the question is, do we do it again? The dip buy on the market for the entire year has been amazing. It's been kind of the only game in town, right? You're not buying breakouts in this market. When the market dips, you buy. Every time this market has dipped a little bit, every time we've gotten an ugly gap down, some scary news, it's been bought up, right? If we go to the SPY, we have a gap down, the market rips. We have a gap down, the market rips. We have a gap down, right? Over and over and over again. Now we're back at that support. So I think the simple question is it going to hold this time? Do we do some sort of move where we flush the market down to trap in more bears just to rip it back up at the prices we were at before? I don't know, but that's what I'll be watching. Is just this support area. Call it anywhere near 5,800.
Yeah.
And just trying to see, right? Is that going to be the support zone again, where we're just constantly ripping at this price over and over and over again? If it is, then great, just another buy the dip. But I'm in that buy the dip mentality until I get some sort of evidence that that's no longer going to work. I think that's kind of the game you have to play. Is I'd rather buy the dip 3 times, right? I
Mhm.
bought the dip back here, bought it again here, bought it here, bought this dip as well, knowing eventually it's going to not work, right? And that's where risk management comes in. The people who have gotten really killed in this market are the people that have shorted against these lows, or the people who've bought against these highs, right? It's the opposite of what we need to see, where we can't just buy the dip or we can't just buy breakouts anymore. We can't buy trend continuations. We need some sort of dip. We need to, when the market is looking the ugliest, has always been the time for the last 3 or 4 months that you gotta, you know, you gotta get in there and you gotta buy it up. And it gets really, really hard when you see this downtrend to say, okay, this is the point to buy, because it feels like you're catching a falling knife. But again, the way I'm looking at it is I've bought the dip many times this year. It's worked every time. I know full well one time it won't. I'll be buying in this area again, and I'll get my hand slapped. But I'd rather buy it 5 times, on the 6th time get my hand slapped, than to be the guy who's been bearish all year as the market's just been bouncing up and down in this range. So I think today is a very important day. I think there's a potential that we flush down this 5,800 or so on the S&P 500. If we do, then we got to look at the 200-day moving average below, and then we've got to look below that. But it's one of those things where, again, for me, I'm holding my nose, I'm doing some buying here, and I'm knowing full well that there's a good probability that this is the time that I get my hand slapped.
Yeah, I think that's what's happening here, and I can't blame you for doing it, right? My biggest thing is that we're starting to really see the cyclicals start to break. Technology, of course, has been weak, right? But
Mhm.
that's where I start to get a little bit concerned, is when I start to see other areas in the market really kind of show some weakness. And another thing is, it's not like the basic materials are ripping either. This is an inflation concern. This is more, I think, GDP concern and consumer spending concern. And wondering what's going to happen there, right? I think that there was a long time where everyone was saying, but the inflation has broken the consumer. The inflation has broken the consumer. The truth
Mhm.
is, that stuck around for a long time, and people were just spending more money and money and money and money. Are we finally at the point where the consumer is feeling that stretched, where the point where the spending is slowing down? And I think one thing that we'll be looking at, of course, and focusing in the long term is delinquency concerns and things like that. Of course, if you look at credit card delinquencies, they're nowhere near what they've been in the past, but they are rising, right? Same thing with cars. That's one of the areas that I would tell you guys to keep an eye out for. Why? Because the car prices that they were in the financial crisis are nowhere near the prices that they are today. So maybe housing is kind of similar situation that happened in the financial crisis, right? A lot of housing kind of went up an extreme amount, but cars never have been this expensive, guys. And I think that one thing to note, and I've been seeing it, is that those car delinquencies are rising. I think a big part of this is that, dude, there's not many people that can afford $700 or $800 car payments and consistently stay there, right? So
Mhm.
just something that I'm looking at and throwing out there that could be the concern that's really showing up in the market.
And another thing that I'm watching here is just this chart is the
QQQQ is
RSP.
rising, man. I will say
Yeah.
that.
So yeah, the RSP is the equal weight S&P 500. So this is a good way to say, is it large cap tech that's selling off, or is it everything, right? And if we look
Yeah.
at, we just talked about the S&P 500 was down against those SP 500 was down against these lows, was down against the January lows, and then also the December lows. If we look at the RSP, it's not, right? The January lows are well below us, so showing some good relative strength. And again, just something that we've been talking about a lot here. If you look under the hood, a lot of names look great, right? XLF hit a new all-time high yesterday, pulled back just a little bit, hitting at highs. I don't think you see like a big, ugly, scary bear market when you have financials hitting new highs. XLV, we have healthcare broke out, looking fantastic. A lot of places around the world. EXU, I think, is EXJ. It's Japan. It's looking fantastic. I got my countries down here. But yeah, a lot of other countries looking EW. Yeah, EWJ looking okay. EWU, and this is United Kingdom, basically hit an all-time high yesterday. So this is very much isolated still to just comparing this SPY, seeing that hitting new lows, and then looking at RSP, which is not. It's showing us that at least the leaders to the downside are the big cap tech names. So, it's something I've been saying all year. If you're one of those people that you judge the health of the economy on how like Nvidia is doing, it looks pretty bad, right? If you're judging the health of the economy about your banks, about your insurance companies, about, little boomer type stuff, but they're real companies that are still doing real things out there, then everything looks pretty okay. So I think it's one of those, and this is what we kind of want to see, right? For the bull market to continue, is you want to see this back and forth action in the S&P 500 while things rotate under the hood. You can't have AI names going up again and again and again forever and just say that's a healthy market, right? That's okay for a couple of years, but you need to see this where banks are catching up and hitting new highs. We're seeing healthcare hitting new highs. We're seeing a lot of things out there that are not just these big tech companies doing well. And again, that's what we need to see, and that's what I'm looking forward to see. Now, it means that the SPY and the Qs that are cap weighted, and they're like 30% technology, they're gonna get hit if this is going to continue. So it's one of those: be light on your feet, look for where the rotation's going, kind of look at where the puck's going to go next, and try to land up there. I think that's the kind of market that we're in. And when it comes to just looking at today, right, I'm betting with you on a potential little bounce. So I'm watching the UVXY potentially break down. I'm going to look at the Qs here. We are above VWAP now. You can see that little green arrow trigger. I was watching that one. I might start trading some of these in the pre-market just to see. But nice little breakout there. We need to see a hold of yesterday's low, right? So we'll see what happens here. So I saw that what goes up must come down. Let's test that theory. Let's just go to the S&P 500 and go to a monthly chart. Does it? Right? The market goes up over time, right?
Yeah,
it's one of those things.
100%,
If you believe, the US is done, then yeah, the market will go down for a while, right? It's one of those. I think that the US will continue to make stuff and the world will continue to buy the stuff that they make. So that's why I'm a bit of an optimist when it comes to this. Plus, just the data, right? Put your finger on a chart of the S&P 500 at any point in history. There's a 75% chance you're up 1 year later. So it's like,
100%.
do I want to fight those odds, or do I want to look for areas in which to get involved in that potential higher action?
I agree. I mean, I can't say it wrong, right? I mean, at the end of the day, long term, the market always goes up, no matter what, right? And that's the way I'll always think about it, right, guys? The hard part there, right, of course, is understanding when rotation's going against you and what might need to break or help here to get the market back, right? So things that we've been talking about, right? So healthcare is going up, financials are holding in, right?
Mm-hmm.
If financials start to break, sign of concern, right? If they start to break to the upside, could help the rally come back, right? I think what we need to see is tech stop going down. It doesn't need to come back up, but it just needs to stop the bleeding. And what I'm looking for is an important sector. I'm looking at industrial here. And I think that's a big focus for me. Why? Because if you looked at Trump's early presidency, right, his first term, what was doing well? Well, what was doing well was manufacturing overall. We had this manufacturing boom underneath him. That's the complete opposite of what we're seeing right now. We're actually seeing manufacturing slow down. This is where it could be different than last time, right? And so if there's any chart that I'd take a look at, I'm watching that XLI. I'm seeing the weakness there. I'm not trading it here, but I'm wondering, can it break the 130? Yeah, we get some further downside action there. But back up towards 140, and next thing you know, you could have that expansion. What are you seeing on the XLI at least?
It's funny, we talked about the S&P 500 hitting those January lows, and that's a big tech-weighted sector, and if the RSP wasn't. This chart looks pretty much exactly like the RSP to me, right? It's still above those January 2025 lows, got the 200-day moving average going around, so a lot of very important action in this 130 to 131 area. If we hold this, everything's still looking good. If this breaks, then I agree with you that I think we have a problem, but yeah, just, audience, absorb this chart into your brain for just a second, then let's go over the RSP.
I got one. I got a chart
close,
just
right?
to at least just to add to the conversation really quick, Michael, and then we'll go to the RSP here. So here is Eric. I love the way he does research, guys. So if you guys have never heard of Eric here, I would definitely give him a nice follow. I can throw up this in the chat. I always tell you guys, good guys that I feel like, do some really good work here. And, it's important to note that, this is a bearish outlook, but it's something important, right? That he states here that the tariffs are not helpful for growth, but it's worth noting that key cyclical parts of the economy have been in a downturn since summer 2023. And he's talking here about the durable goods manufacturing, right? And I think that this is important because this is how it was in the first Trump area. It was a nice kind of rise. We were coming from a bottoming and we were going into an expansion period, right? Versus how we're going now, where we came from an expansion period and are now starting to see that drop off. So I think it's just a different environment. So I was one of those people that I can say, yeah, when Trump first started in this next presidency, I was trying to compare both, right? And trying to play some of that action. I did play some of that action. That was the financials. That's what I first pushed on. But now I'm starting to be a little bit concerned about the industrial space and things like that. So I'm not saying that it's completely broken, but something to look at here. I'll go to you now. RSP outlook, of course, that's going to be your equally weighted outlook, right?
Yeah, and I was just saying the XLI right here looks pretty much exactly like the RSP. So if we go back and forth on this chart, it looks pretty much like the same chart. So it does kind of show that it is an important sector. My only question and this is again just me being a technician at heart, I just wonder how long is it to take effect on those numbers that you posted? Is that one of those things that the guy's been in the job for a couple months now? Is that something that has to take years in order to come through? And then if so, right, the market being a forward-looking mechanism, I think we should see XLI move before we start to see those numbers kind of print, because I just think that the people that are the smartest out there, they're gonna know, right? They're gonna be able to go through and do that as well. So yeah, I'm looking at that. And then again, I think a lot of the story that people aren't talking about too much that we need to look at is just the interest rates coming down really, really hard, right? So this is where it's funny. You were talking about when Jerome Powell lowered rates. Well, the 10-year rate didn't believe that he was going to continue to lower rates, and it started to rip. And that's what we saw here. This is the TNX is the 10-year interest rate. And then yesterday we had a big gap down in interest rates. So interest rates continuing to move here lower, just showing us that the market believes they're going to cut. And I think that's the different environment we got to look at as well, right? If the market gets bad here, right, we know that the most powerful man on earth measures his success a little bit on how the market's looking. And before, when interest rates were near zero, the Fed didn't have much ammo. But now with interest rates at what, 4%, they could do something, right? If things get really bad, they have that ammunition that they could pull, and they could say, okay, well, we're going to drop rates again. And then all of a sudden you're going to see everything starting to rip like it was 2020. So I don't know when that would be, right? It's one of those things that technically Trump isn't supposed to have control over the Fed. But the reason I bring this up is because if you were trading last time in the last administration, he would just go on Twitter and bully JPOW until he lowered rates. So I could certainly see that happening again. And I wonder if that's what the market's pricing in with this just absolute, like this, you don't look at the numbers on these because it doesn't look crazy to go from 4.8% to 4.15. But for interest rates all across the country, that is a huge, huge deal, right? We were down to 3.6 in 2024. This is kind of in the middle of the raise cycle. So yeah, interest rates are going down a lot. Not like it's going to be fun for us to day trade, but this TLT chart is pretty much going to be the opposite of that chart. As rates go down, this goes up. So might be one of those that if you want to trade bonds, you find a triple leverage bond ETF out there, because I'm sure there is. But I think that's a lot of the story. That's probably the reason that we're seeing the real estate markets just pop. So, I don't know, home builders might be something to look at as well in this.
Hey, not bad look there. I think one thing that I'm thinking about here is the jobs report for Friday. I'm expecting a disaster report, and I think that this is something that we need to start thinking, is this what's put into the market? And I think that this is why I talked about how I think cuts are coming soon, guys. I know that a lot of people are not thinking about that. The CME Fed tool is not thinking about that, but it's starting to show a glimpse. That's what I showed too. It went to 11% for a cut. I think you keep watching for that. See if that changes as it starts to develop, especially after Friday. I think that 11% is slowly but surely going to be moving closer towards 50% chance. And if we think about what Trump has said, right? What did Trump say? He said that market's cutting soon, baby. He said the market's cutting soon. So I try not to forget about that because a lot of things that he says, he does. So even though it might take a little while to put the pressure on Jerome Powell, is let's say a spiking of the jobs report, downward market action correction, and pressure from Trump, are those three things going to turn him? I think it very much could.
Yeah.
Right? I mean, let's just be honest. The pressure is getting on him now.
Yeah, and I think that's 100% what we have to watch for because, you know, the whole don't fight the Fed. It's one of Marty Swag's tenets of the market, right?
It's
and
just there's two things that matter, guys. Fiscal, monetary, right? Let's just keep it honest. In long term, those are the things that affect the market, right? Fiscal policy has been affecting things negatively with the tariffs. But monetary can come in for the save, I think, here and start to cut. And doesn't need to be a big cut. Even a 25 basis point cut will start to get what? The investments starting to get going again, the housing purchases, the consumer purchases, right? But what we can't have is also to break the market. That's where I think the market's at right now. And I always think that the Fed likes to play extreme. You mentioned it also. I talk about it like a teeter-totter. It doesn't go to the middle. It leans one way. Either they're extremely restrictive or extremely supportive. Does this finally tilt it back in the other direction? Things to be thinking about, right? Let's get to some market conversation on today's action. Of course, we know that the tariffs came in. What has happened here? Of course, they confirmed 25% tariffs in Canada and Mexico that would go in effect, leaving no room for negotiation. Also adding to the fire, 10% tariffs additional on Chinese goods. Of course, China retaliated with tariffs up to 15% on U.S. goods and restrictions on exports to 15 American companies. And remember how I mentioned how Microsoft was one of those companies being like, yo, please help us out. We can't have this. But I think that that's also something to think about long term. Microsoft is pushing. I think they're a little bit concerned about what could happen here. One thing that I'd look at is the earnings today. We can talk a little bit about the earnings, Target, and maybe Best Buy. But what were you going to say, Michael? I didn't want to cut you off there.
Well, I was just going to, it's interesting that we are gapping up in FXI, or Chinese equities are bullish right now. So this just shows, this is, you know, what we talk about all the time when it comes to the market is forward looking. So, you know, he said tariffs are coming. So the market prices in tariffs coming. And quite often when tariffs come, that's when you get, sometimes if it's a bearish event, you get a buy the news type of thing. And then sometimes you get what we call sell the news, where if a good event is coming and the market rallies into that good event, as soon as that launches, you get a bit of a sell down. So this becomes a very interesting type play where now that it's out of the way, right? The Band-Aid's pulled off. Everyone knows the thing was going to happen, is going to happen. I'm interested in looking from a swing trading point of view at these Chinese stocks. We're consolidating at these highs. See if we could break through for FXI, right? That'd be good for BABA, JD.com. You know, some of these more Chinese internet names might be a little bit more interesting with KWeb. That's another one that I want to look at, just because Chinese internet probably won't matter as much when it comes to tariffs as opposed to building things and shipping them in the country. So TME, which is Tencent Music, all of these names, it's one of those, right? The news is out of the way. It shouldn't surprise anyone. If anyone woke up today and go, oh my God, there's tariffs, I'm so shocked. Well, you got to pay a little bit more attention. So I think the market's kind of taking a big sigh of relief and saying, okay, now that we know what's going on, let's trade them. Let's trade them as if that's out of the way, kind of like an earnings report. the analysts bake into the price what they expect earnings to be. If earnings come in line, then nothing really happens. If earnings beat up or down, then that's when you get some movement. So that's what I'm seeing. I'm really interested in China now that that news is out of the way. And again, the market's not falling apart. So nobody's worried at all about it, right? It's in there. You can see the action. You can go to actually the Chinese side of things. If you want to see how BABA trades on other exchanges, you can go and take a look at that as well. Not much movement. So again, priced in, right? No one cares. On to the next thing.
Yeah, I think we got to watch to see what happens today. I think especially out the gates here. Let's see if we can get, I know it sounds bad, but I'm looking to see if we can get maybe just a gap and go. So some stocks, like, they're already beaten down. I'm looking for just some quick action here out the gates. And I think that the cues are going to be important to watch here out the gates. See if we get this quick action there. And I think that it's kind of hard for the bulls to just keep coming in. At some point, they start to feel the pressure. I think today is one of those days where if you look at the daily chart, SPY is literally on the lows right now on the daily chart. And so is the cues. And so it's common to see fear right now, right? It's common. Where's Justy? He should be here. There he is. There's my friend. Oh, I think what happened there is it didn't make the noise. I didn't hear the noise when he got in. I don't know if you heard the noise, but let's let my friend in. What's going on, Steve?
Yo.
How we doing?
I was like the let me in meme. I missed you guys. How we doing?
Thanks for Tim in the chat here telling me Justy. I was like, yeah, where is that guy?
I gave him the little holler to see if they could nudge you. Yeah, sorry about that.
Thank you. No, the nudge helped. Man. It's hard live and producing at the same time, guys. But it's just the name of the game, guys. But yeah, it's good to see you, my friend. What are you looking at in this market? How do you feel about our market conversation?
Well, I was agreeing with a lot there. There were a few things that I would have chimed in, but then you guys covered most of them. So I mean, you're doing my job for me. I love to see it. I think that, I mean, heck, I won't take up too much time because we have the market opening here. But really quick, it's hard to be that bearish when XLF looks this good. That's it's one of my top watches this week that I heard Michael mentioning. We got the 200-day moving average coming up on us. I think it's 570 and $1 and change, something like that. So, I mean, bottom of the range, like Michael says, we've got big long-term support. If you are a 200-day moving average buyer, you've been waiting since October 23, I believe.
Long time.
Yeah. So, there's money waiting to come in. I need that to get lost for me to get bearish. I think that monthly support is right around there too. We're trading in a big megaphone. Everybody's freaking out, which means that I think it's almost time to start deploying some cash. So that's kind of where I'm at.
No, I'm with you. I said this, I remember at the beginning of the year, and it wasn't my research. It was Todd Sowen at Strategis. Range bound markets on year 3 of a bull market. So that's what we're going to get, right? So speaking of, let's take a look here at the 2-minute chart. And again, do as we always do, mark up pre-market highs and lows. And we are pretty much at pre-market lows, but we'll do the pre-market highs and lows, and we'll see what's going on there. We'll see if we get some sort of violation of either of those, and then maybe a rejection from or a continuation to, but just choppy action getting started here.
I think we got some panic on the tape in the past couple of days. For the first time, I've been pretty consistent about saying this has been a pretty orderly sell-off until until the Zelensky stuff and then yesterday. So I would love to see a flush here. Personally, I'd love to see a flush and then a really strong trend day after that. But
that's my my game plan. So I'm doing the normal AVWAP flush down strategy that I've been doing. Still working on that, right? If it's not this account I pass, I'm confident the next couple I'll definitely get through. One of the things that
TQQ.
I was mentioning, I'm looking at the Qs or the SPY to get back through VWAP. That's going to be my trigger, just to give it a little bit more room. So I have the Qs up here, right, going through VWAPs. Also, I was thinking UVXY potentially could be a good way to play it as well, right? So if the Qs are going to move higher, then right, the VIX is going to move lower, and then we could potentially see that. But we are not seeing that right now in UVXY, where we're popping a little bit. So you can see that's on the list here as well. So I wanted to do that.
All right, watching the mass and the small caps, and I'm watching TQQQ here. Oof. Took a look at the small cap there, and big hit there in the TQQQ coming right back down here. Was looking for that low to hold in now. Now I'm going to look for it the low of the day to actually hold here. If not, I'll cut out.
Yeah, I'm watching for a rejection here, and I will scalp down a little bit just to be a little more active on the show. I'm trying to work on that.
Yeah, so for me, again, I want to see, like we mentioned, a little bit of an undercut and then a rally up through. And then if we get that, then I think that looks great. I've noticed that mass.
Sorry, Michael, just letting you know, I did get short off of the bottom there.
Nice. So yeah, I noticed this one for that potential a VWAP fade. I went through my numbers, and it seems like these lower, crazier type names don't do as well for that particular strategy. So this is something that I'm gonna avoid, but it would be triggering kind of right now as a short in order to, you know, flush
wipe out on that TQQQ. Tried to catch it, guys. Tried to catch it there, and just got hit hard there, guys. So definitely hit hard on the main account there on that first dip. So
yeah, we are.
I tried it there. It did not work out, guys.
Yeah, fortune favors the bold.
Yeah, man. I went for the 69. I had a stop placed right there, and right underneath it towards the 69, and it triggered and it went down quickly, guys. They came and got that stop, and it went down in a fast manner here. All right, guys, I'm liking mass here. I'm looking at it for maybe breaking the 50s here. Let's see 350s. Let's see if it starts to break. All right, guys, I'm in now, guys. Let's see if this starts to get the move here. I want to hold it off the 340s here. I'm looking to add now. There you go. I just got the add here. Now looking for it to start to make the move here. Let's see if I can get mass at least in a small account going here. Let's see what happens here, guys. Over 350s, I think, is the explosion. Let's see if we can get it.
Qs continue, or the SPY and the Qs, the market continues to bleed. We're now through the pre-market low. You know, I think that UVXY might have been a little bit of a warning sign early, just to say, hey, these things are pushing. So again, some things coming through the scanner, mostly to the long side, but I'm just not too interested in trading for the long side just yet. But WINT is looking interesting. I've got that same mass that you're looking at, and the candle on Trader Evolution is just going crazy. It's like it's just nuts.
That is a wild chart. Just for the index traders, I did add when we came back up, and we're a little short of the low of the day there. I'm being a little aggressive in my pyramiding here, but I'm just trying to catch every pop back up to my 1 minute 9 moving average, just roughly trying to catch this trend and hold in this trend. And a candle close plus continuation above that, and I'll be out. Just a little scalp. I'm looking for, as we can see, my ATR indicator here. We are in a potential dip buy zone if the market is ready. Personally, I don't quite see it on the tape. I don't quite feel it in my heart, but hey, I could easily be wrong. It's a little bit of a knife fight trade in the first 10 minutes here, of course. If we don't reverse here, I'd be looking for this 575-ish handle here. That would be kind of the area that I would expect us to catch if we are going to feint bearish and then recover in the day. So that's kind of what I'm looking at. Just a heads up there. Overall,
yeah, I'm with you.
I need oh, sorry. I was just going to say, overall, I need VWAP to reclaim and back test for me to get bullish.
Yeah, no, I was just going to agree with you there. I think, we're trying to reclaim that pre-market low now. I think that's the most important thing, right? We got pre-market lows, and then we had a little bit of a problem at pre-market lows. So now if we can get back up and through, that's looking interesting.
See, if I was a little more patient there, I could have gotten the 9 EMA actually proper. But like you're saying, we could always just rip it on up there. So far, I do think that we are in pretty... This is not like a crescendo selling for me yet. So I'd like to see a little more oomph on the tape.
Yeah.
Heavy seller in the 350s, guys. It keeps running into it on mass.
Yeah, I was supposed to say, I got to remove this from my chart. It's just wild.
There goes the TQQQ. Looking good now, guys. I already got stopped out. I can't even get into it now, guys, but that's looking great now. And TSLL, the stock that I really wanted to watch today, just taking a lift to 12. That looks awesome. This is one of those days where I just used my ammo really early, and trust me, I'm feeling bad about it because it's looking great now. Look at that liftoff in the TQQs. This is what I'm talking about, guys. Oh, this one's going to be frustrating, guys. That thing is just boner candle.
That's a big one. My theory is getting tested here.
The 69, dude, and that's what it was all about, man. They caught me on the first action. You know how it is sometimes, guys. You get too excited on that number, right, that you're looking to see break. It goes right to it. I got it too excited, but now it actually did break it. So now I'm looking for 69 recoveries. So as long as it can hold 69 or 69.90s, I think it's looking great on TQQQ. Got a spike here in mass at least at 370s. Looking for it to kind of keep running here. Let's see if some real buying comes in now.
Yeah, I'm watching this VWAP here. So far we tapped it. It does look strong. It looks like it's curling this 9 EMA on the moving average here. Got this nice little ribbon, so it doesn't have to be super exact. You know, I feel, Michael, I know you said draw trend lines with a crayon, right? So I feel the same way, kind of, you know. This is it's cooking it. It's cooking it. For me to really get bullish, I need to see this hold. And bigger picture here, there's another trade opportunity for once it breaks pre-market highs, the swing high, and then comes back and back tests. And that'd probably be some confluence with this big purple line for me. This is a 200-minute moving average, and I love these things. 200s on any time frame are so responsive. So kind of what I'm looking for here. This is cooking me. I'm not gonna lie. I'm pretty close to, yeah, if this candle keeps doing this thing, I think that's probably a sign that I need to reevaluate here.
Yeah, man. TSLL now to 12 there, guys. XLF, though, dipping fast. That's one thing I will say. One to coming back today, BTCT. So some crypto coming right back into play.
Yeah, I was going to point that out here. I'll go. If you just look at Bitcoin as a whole, just rocketing here from 82,000 up to 84,000, pretty much in a straight line. I did take a little bit of Rocket Lab, RKLB.
Nice.
Just triggered through right here, pulled back a little bit and held. So a little bit late on this trade. I was waiting for the market to try to calm down a little bit, but the AVWAP from yesterday is 1950. So if we could get through there, that's a real good price. But again, I'm just trying to look for my $100 or so, and then a move on from there just to see. So pulling back a little bit now, probably risk 2 VWAP, but just trying to see if this thing moves with the overall market. That just looks great as long as it can hold that flush, right? Yeah, I just mentioned yesterday that I am going to start taking these, and I think I am, right? I think I'm going to add this. So now I'll have 2 strategies where you see so much of this undercut pre-market levels and then rip over and over and over again. It just makes me think, okay, we need to start playing these, right? So
Michael, yeah, I'm so you're speaking my language, because just last night I was like trying to hone down, like, let's keep it simple. Let's run like 2-3 straight trading strats that really have high hit rates, and the fake breakdown is so consistent, right? You know, you have the one low, and then to form a proper bottoming structure, you get the double low, you scare people out, you sweep out those stops, and you have so much room above. By the way, SPY here, it is rejecting. I didn't get the hard confirmation of I'm completely wrong, so I am still in this. I'm back to green. I'm pretty antsy though, just because that was a significant pop up to the 580.
Yeah, that was my buy signal on that pullback there. So that's that 68.90s test there, and right back to the high.
Yeah,
I'm like hats blown off, because this was the trade I was looking for, guys. I just used my ammo way too early today. Just got too big, too excited on that first pop. If not, I mean, I'd be looking to see if now you get that 69.50s takeout. So you need to like kind of a close above 69.50s to really get this going now. Let's see if it does want to do it.
I got to say, I need a candle close above that swing high, the 580 handle here, because for me, we are shaking and baking, but boy, howdy, did we not look bullish before the Zelensky meeting, and obviously we squeezed after. You know, like, I don't know, I've been seeing these setups just get smashed with the increased volatility, where you're like, the velocity on this green candle, we must be going up, and then look at this, it just rolls and gives it back. And that's honestly a big tell for me that we are not done going down. That candle right there. Because sheesh, we're both looking at that, and like, none of us are bad traders. We're all saying, oh my goodness, green, wow. And you know, this is it's a whipsaw of a market, I gotta say. If you're a day trader,
that market where you know, you have to give yourself the room, right? And if you don't, you're going to feel it on the day trade side of things. So definitely taking a big hit there today, guys.
I'm taking the short on mass. I know, right? It seems like these low float crazy ones have a lower hit rate, but we got the blue arrow now twice, right? Saying to short in through here. It did that big spike, kind of like what we were talking about in the market, spiked through pre-market high, maybe sucked in a lot of people to the long side, and then just dropped like a stone pretty immediately. So again, just taking the shot, stop over highs. So it's a pretty wide stop, and I'm just going to go for a 1-to-1 on this one.
So 380s got hit into a seller there. Pretty sure that was Ross Cameron. But yeah,
you think he actually trades?
No, that wick there in the 380s, classic one, right? He made 20-30 cents on maybe 5,000 shares, and he sold right into you.
Easy money.
Yeah, right through the 350s, right? Like it went there. For us, we're looking for the move to 4. He sells it 20 or 30 cents, right? So that's one thing to think about, right? And that's going to happen all the time, right? So now what I'm looking for is essentially you're coming back towards the levels where it held, the 330 on the opening action. So I'm looking to see if that can hold, right? The 330s is the spot to watch. You might get an undercut and rally here. So watch out where there may be a 228. But what I'd look forward to see is if the volume can increase there and you see some big sizing come in after that 328 touch. Let's see what happens here. It's really close to it.
All righty, boys. So we did get
Choose
the
right
break
back
of the
down.
lows a day. That is what I'm liking to see here. We are still in this congestion zone. Do you mind pulling up my chart real quick?
Yeah, I got you, my friend.
Appreciate it, brother.
Boom, you're up.
So, yeah, just up here, they were sweating me. They were sweating me against this VWAP here. This candle almost got me, but I'm not going to lie. This should have been probably a stop out. You know, we got a close above VWAP and then continuation candle, but heck, I didn't believe it. I'm not going to lie. It was a higher volume than the previous couple candles. So my logic there is that they were running stops on this 580 level. And I said, I need a candle above 580 proper, you know? And so then this is what I would like to see. We could try to double bottom. So I am watching for a sweep and a reclaim, but it doesn't look strong to me. I would like to see volume continue to increase here as we work our way through this congestion zone and go for this 575 handle. So let's see how it cooks here. There are still some people trying to buy it. Oh, I might be getting cooked here. But I need that candle close.
Wheeler on a halt.
90 a minute.
330's holding well. What was that? Was that a real wick?
On mass?
I got something on TQQ, maybe on the Qs. Was that a real wick there? It could have been.
TQQQ.
No, I didn't. I don't have it on T. I don't have it on TC. That's just a bad data point there.
I think right. I think the overall thing we got to look at more than anything is this Bitcoin. Right. This is the chart when I'm looking down here is a chart of the S&P 500. Right now, it's Bitcoin. Just because Bitcoin preceded that rally higher, right? We had that move on the weekend where, hey, we're going to use a Bitcoin strategic reserve and the whole thing rips. So if we can get Bitcoin holding in and moving higher, I think that's a bit of a precursor for the overall market to see if that can move higher as well. Just to see, that's kind of what I'm looking at here with, because if this can dig in and push higher, I'm interested in maybe taking the SPY on that second push through.
Yeah, Bitcoin's given an interesting look here with that final shakeout before the news. We came back and we're retesting this zone. I love drawing out these Vs, especially on the hourly or 4 hourly. And it's like, how many times do you see the breakout get back tested so deep that you're like, oh, it's over. But really they're just digging into this V and just cleaning up this kind of surgy one-way structure is what I've kind of found. So if we can reclaim this area, then I think we could be off rocking and rolling.
Q's trying to hold there, starting to look for that break towards the 496. I like TSLL. I'm also thinking about just taking TSLL in my funded account here because I do like this look here.
Bitcoin is making that move
higher. Energy. Thank you for the comment. We're gonna make it. Although this is a bullish stick. This is a bullish stick. It can resolve anywhere up here. We do have 30 seconds left, so maybe the wick down is still in the cards.
Long TSLL in the funded account here, guys. Long off 1169. Looking to see if we can get to push back through 12. Let's see if we get it here.
How are we feeling on Tesla, boys? I mean, it's
oversold, man. Oversold.
I've been long since I took a nibble at 350, so I've been getting cooked. But I believe in the grift. I believe that it's hard to bet against the guy with the president's ear when we are in a deregulatory cycle. Okay, so this is
exactly.
potential double bottoming action here. I don't see the surge yet, but
yeah, I'm looking for it. See if the Qs or the TQQQ can get to 70. Let's see if the Qs can get to 496. Start that break there. SPY, I haven't really taken a look too much at there. It's on the it's a little bit weaker. So I'm looking to see if technology can lead the action. If I look at what's doing well on the day, and let's take a look here in the last like kind of 15 minutes here. I'm just gonna have a refresh.
I'm seeing some relative strength in some of the mega caps. Google looks a little oversold. TSM's obviously holding the market up a little bit there. That's nice to see. A whole lot of red though. I don't know about your guys' watch list, but it's kind of brutal out there. One area that I'm really interested in buying the dip on, and Michael, I heard you touch on this with Rocket Lab, is the space names. Maybe I don't know if now's a good time to talk about it with the market doing things, but I would like to talk about that a little later. I think there's some really good long.
There's a push in TQQQ.
Yeah, looks like I'm probably going to get cooked here a little bit.
Don't worry, I got cooked. You know how they do it to us both, right?
Oh yeah, they got to get us both. They had to do it to us. But it is a good lesson. It is a good lesson on these crazy days. There's no shame in waiting a little bit. You know, often in the cash account, I don't trade till the first half an hour's passed. And look at that mean wick down. Like, this is not easy action if you don't have a system to manage risk. Like for me, I'm just watching that VWAP, and I don't know. I honestly don't know if this trade's going to work, but I got to trust my bias. Is really, if I look at 1 minute candles, often I will get psyched out. But this is showing me that there's still sellers at VWAP, so I can't bail on my thesis if it's not telling me I'm wrong yet.
Yeah, so here's the flush on mass. So the initial stop was at the high of the day. So now I'm just putting the stop over VWAP, which would be 350, to see if that ends up. If we get into a little flush under $3 even, that would be my profit target on that. And then Rocket Lab, just kind of chopping around. It's about at my entry. So if mass can win, I will probably cut the Rocket Lab, break even, just to end up, because the idea is, right, I'm just looking to take the trade and get that $100 profit target and then walk away. So far so good, right? Been digging out of a pretty massive hole here,
out there, guys. Be careful out there,
guys. So ASTS, if you don't mind bumping over to me real quick. Perfect. I just wanted to say this chart is looking freaking great. I gotta say, there's a lot of things I'm liking here. Really quickly, this is on my watch list because it is doing the exact same thing that HIMS did before it squeezed. This is a very clean cup and handle. Excuse all the mess here. I've been trading this pretty actively.
Hard hit there, guys.
Yeah, market flushing.
Oh
yeah,
shoot.
Man.
I like to hear that.
In Tesla.
I will switch over to that now, and then we will talk about these in a sec. But I think that you were looking in the right spot for the space sector, and it makes me feel real good that you're looking too, Michael. Because there's not a lot of things that I was bullish on a few weeks ago that are still holding up as well.
Wipe out.
It's interesting though, we're not seeing that on the Qs, right? So the Qs are still holding the lows, and they're still holding their pre-market lows, where the SPY isn't. And that's not what we've seen for relative strength recently, right?
I was going to say, I think that is a sign that we could potentially be looking to reverse this morning dip here. I mean, how I'm kind of thinking about that is if Qs have been leading the way down and we are at a pretty pivotal time. I mean, I don't know if we touched on this yet, but tariffs are supposed to go into effect today. We'll see if they do. Even if they do, market loves to bottom on bad news. I'm personally, I don't think we're ready to just have the bottom fall out, regardless of your political, views, things don't have to be good in the macro sense for the market to go up, right? And we don't even know how bad things are or how okay things could be. There's a lot of speculation on both sides. So I don't know. I'm looking for the bounce, even though I'm not really excited about a lot of things that are happening in the world right now.
Yeah, it's just
Maybe
how it
that's
goes.
emotional hedging. It could be, So this is a decent sized upwick here. I'm going to be watching this low a day. We're testing real low a day there, previous low a day, but this opening one where there was more volume, I'd like to see. See hold if we are bearish.
You need to get the cues back to the strength and not got to get out of Tesla or TSLL.
Yeah, contrasting that with what's going here on the S&P 500 or the cues, right? We just saw Steve there with the SPY, and the SPY is down under these lows and down pretty big, but the cues here so far anyway, a lot of bottoming tails right at this zone.
Yeah.
So it's, I think we just got the same just comment in chat. If we just look at all the wicks, all the bottoming tails, so there's definitely a really strong battle going on in this zone, which means if it fails and if we wick, right, if we close any significant time below that on the cues, that's interesting to me. So I am really watching closely here. I think maybe even just a high day break. I am shocked how tight this range is, right? It's a lot of chop back and forth, like, it's a lot of movement one way or the other, but it's no real action, right? There's nothing really kind of happening here. So we need to see a resolution to the downside would be interesting. I just wonder if they do a reverse of yesterday, right? We pretty much rallied most of the day yesterday and then just flushed at the end of the day. I wonder if we're going to see the opposite. Flush all day and then pop.
Yeah, when you see huge bid on TSLL right now, 60,000 shares there, sitting there at the 1120s. This could be a flush down. That's a little bit scary there. So that I'm just literally hand on the trigger, about to lose a decent amount here, guys. And you guys know I always keep it 100% with you guys here. That was a hard flush down there. Wasn't expecting anywhere near that kind of flush down here. This is a 15-minute support trying to hold on here. So I'm just trying to hold it to see if it can recover. Tesla would be the 270 recovery.
Look at the volume there, and then it whipped up. So like somebody's there buying. Maybe that big order's a buyer.
Yeah, my thing is I'm looking at Tesla too. 270 is an important level.
Absolutely.
So 270 is an undercut and rally type of trade there on Tesla overall, not looking necessarily at TSLL, but looking to see if it starts to make the move back. Because if not, below that, like kind of 1120s is really a sign to get out here. It's testing it. So,
I do love watching for big
wicks at 68. I'm sorry about that. Go ahead, Steve.
I was just gonna say I do love watching for big prints on big like levered ETFs, both for indices and for individual names. Often big money will use these to kind of signal tops or bottoms of ranges. So it's a great thing to watch out for when you see some big prints on TQQQ or Tesla Long, any of these kind of names. And look at this. I don't know. I am a hopeless Tesla bull. I don't even like the company, but man, I don't think it's going down. So. I always am inclined to say that's a buyer, but
when I start getting excited is when everyone starts saying that Tesla's going down because of political reasons. That is not why Tesla's moving, guys. It's moving because the margins are deteriorating in tariffs. That's why it came down, because steel prices, lithium prices, all the types of things that you need to build a vehicle got a little expensive. So
also, I do think that, I totally respect everything you're saying. And I think that, there's a lot more going on than the public narrative. I do think that Elon's becoming a brand risk in a lot of ways. I think just from not politically at all, just from a business standpoint, I don't want my CEO saying some of the things he's saying, polarizing his target addressable market. That's
I think that's fine and all. I think it's okay to have that opinion. But the truth is, when you see Tesla drivers, what do you see?
My own personal opinions? No. I'm sure
yeah. What do you see in Tesla drivers? When you see Tesla drivers or someone that owns a Tesla, how do they act about Tesla?
I think in general, they probably by now have learned to distance themselves from the silly things that Elon says. And it's an electric car, and they probably bought it because they're relatively environmentally conscious, or it's for whatever reason. They're cool.
No,
looking
man,
cars.
it's clout, man. They don't
Okay,
buy
all
it for
right. I wasn't sure what you're looking for.
economical reasons, man. It's clout. They buy Tesla to prove status, man.
Okay,
And
all right.
it's a status move, man. That's the reason why. And I'll be honest, I've had bosses that have Tesla. Why do they have the Tesla? They're showing off their status, man.
Okay.
And it's a status move, guys. And so I think that's why you're seeing people buy Cybertrucks. It's not because they like the way it looks. It's a status thing. You don't see another one in the parking lot, but you will see another Mercedes in the parking lot, right? You'll see 2 Mercedes. You'll see 2 BMWs. You might even see 2 McLarens, but you ain't going to see 2 Cybertrucks right next to each other.
You are not wrong, my friend. Yeah,
it's
I don't
clout,
know.
Man. It's clout.
I get I like that understated, just the Benzes, the Beamers. I don't know. That's my kind of wealth when I make it.
Yeah, I know, right? I'm with you on that status. I'd be more, but I know how they are. They're like super like, oh, well, I drive a Tesla.
Yeah.
I have FSD.
Man, how funny is it thinking about how the narrative has changed regarding Tesla buyers? I remember the old South Park episode where they were all sniffing their own parts, and now it's.
But it's just how it is, man. And I think that you'll have the people that like get offended. But I'll tell you one thing: majority of the Tesla buyers are not the type that are worried about what he's saying out there. They're just not worried about it. They're more worried about that they have a Tesla and nobody else has a Tesla. They actually want that to continue. They don't want everybody down the street having the Tesla. Then it's not cool anymore.
Mm-hmm. I will say, I'm kind of devil's advocating my own views, because I do think that overall this is oversold. I think it's silly. Yeah. What are we doing in SPY here? We're just riding down that 9 EMA, so that has been a good level to watch there.
The one thing that has me concerned here.
Look, right?
It's so strong.
Guys, the one thing that has me concerned as being the guy that was even looking for the up action is the liquidity move here. So it's perfect setup where you see the support. Everyone's seeing that support right now. Mm-hmm. So I think this is the perfect time to go for the liquidity move where everyone stops are getting triggered. I'm getting triggered right now in TSLL. And I think that this is normal because this is when they do that liquidity move and then they could bring it back. So they want to wash you before they take it. That's the one thing that I've been learning more and more of. And I think that's so hard to trade that, right?
So what's up in here? Let's go to the NASDAQ 100. What's holding us? Because, right? You're right. Tesla's flushing. Amazon's down. Meta's down. So I'm looking for, what's holding us?
Google, Apple. Apple's holding pretty well.
So that might be an interesting way to play this, right? So if you think the Qs are going to bounce here, right, you just might want to go inside the Qs and look at what the strongest name is, and look at if you just use the pre-market lows as your relative area here.
Comes that liquidity test. There it is, man.
Here we go, baby.
Google's holding.
So I'm going to start taking profit pretty soon here. I still want we're going to get the 75 handle. I'm pretty positive at this rate. This is a nice velocity on the sell here. I will be looking I'd like to see the tape increase. Right now it picked up from like a 6 or a 7. Let's call it a 7 to like an 8 or 9. So once it hits 10, I'm going to definitely take some profit. It could continue for a while, but I want to be cognizant of the potentiality of a really like sharp increase and then whip up. So 575. I have okay. I did just I took a partial there. I'd like to see this 574.18. That's another level I might take a little partial. We are seeing the buyers there at 575 trying. Not seeing anything to scare me yet. Hanging out with 2/3 position left.
20 seconds, guys, in the next 1 minute. I think it's very important, guys. So I'm watching the seconds here when the 1 minute candles are going to turn over. We got about 13 seconds here. Let's see what happens on that next candle here. 9 seconds now. Let's see what happens.
Look at them holding this other level. I wonder what this is. I have it on here for a reason, I swear. But there is a level at 575.33 that they are trying to reclaim. Let's just call it 575. I think that this is some normal retracing of a big flush. I am not worried unless we engulf the stick. If we engulf the stick, then I am immediately getting out of the rest of my short, and I will be reevaluating.
All right, guys, they flush them and then they take them.
Mhm.
That's what I'm looking for here. And I feel like this is more of a strategy that I just need to play more often, right, guys? And it's not even a technical strategy, it's purely psychological. So looking for technical setups, but then looking for those technical setups to get washed.
Well, I will say I think it is technical in the sense that the obvious setup is there's a very high incentive technically to sweep those lows and break that setup, like you were talking about, right?
Mm-hmm.
In a sense that they'll see the orders on the book and they'll be like, oh man, everybody has their stops here. We could just efficiently sweep those, get some shares for cheap, take it up to the top of the range, sell those shares off, like from a market making perspective.
Now, I will, as someone who hung out on the floor with Jay Woods last month,
Yeah.
I will push back on they see the orders on the book. I
Oh,
think
yeah?
it's more of a he claims that they don't, and
Oh, okay.
even if they do, they don't care. But it's obvious, right? They look at the chart just like everyone else, right? So they know that there's a lot of people who bought these dips right here, and they bought the pre-market lows, and they sweep it below. But I'm with you. I think this is something that as a crew here, we could put, and I'm talking to the people in chat, we could put a whole lot of eyes out there and say on 5-minute charts, let's look at all the big names out there. It might be something that's really hard to program, but we'll figure out how to do it. And let's just start looking, because with the Qs, same way. If we get back above this 492, I'm gonna buy this. My stop's gonna go at the low of the day, and I'm gonna see if I can get maybe not an all day hold, but if I can get a hold until lunchtime or a little bit after, because I think this is the move. Because what you're doing sounds kind of mean, but you're playing against all of the other newer retail traders who, they're getting hurt a little bit, right? You're playing against that. But so I think the play becomes real easy, is you're waiting for confirmation that this is a liquidity grab and not a breakdown, and you're just trading failed breakouts and breakdowns. Now we can work on the details about how to confirm that, but I think this is a play that could do really well across the entire firm, right? And of course, with Trade the Pool, we want people to get funded, we want people to grow their accounts and get payouts and all that stuff, because we get some of that as well. So I think what you do is you need that confirmation. So as a group, let's work on making this strategy something that's kind of our little game. And I wish this mass, right? I wish I could have gotten it somewhere up here. End up coming down. I got a boat break even, a little bit of a loss on the play. But if I was able to get that sweep and get a little bit of a better price, then I could still be in this name, right? So that's what we got to look to do here.
It's a tough one. It's a tough one.
Michael, real quick, I did take a little bit off again on my SPY short. So now I have a half position now, just to make it nice and easy. I was seeing some bottom wicks here. I still am bearish a little further, but I just wanted to make that note. Also, I am curious, and definitely deferring to you. I appreciate you calling what may be a bit of a trading myth. So when I'm, for example, looking at Bookmap, for example, on my screen here, and I am seeing these orders below the I was watching this level previously. They swept this one. They kind of are playing around here. So for me, when I was looking on the Bookmap, this was what informed my target. So that's how I kind of was envisioning, like, it is on the books in some regard. And for me, so would you consider that just a retail mindset, and they're not operating on that, looking to sweep that liquidity? It's more just
they can see the limit orders. As soon as you put a limit order, it exists out there in the market. Stop loss orders, right? Stop loss orders are held either at your broker in a lot of cases, in which they're not actually in the market at all. Most brokers will do that. And then they're even if they are, they're held off exchange, right? So
but limit orders are still visible on the book for all parties. I would
limit
assume.
orders, orders are out there, stop losses out. So the whole the myth of they're hunting my stop loss, it's not they're hunting your stop loss. What they're doing is they're hunting obvious places for
order
stop
flow,
losses.
Right. No, I think we're on the same page. How my understanding is that the limit orders are considered passive or longer term orders. So that's some big guy who's looking to buy down there or something. And then how I was taught this is that market makers are incentivized to drive price to these levels because they're getting paid on the amount of orders filled as opposed to the actual price. Does that
So the
Wrong.
important thing to know with market makers, what their entire job is, they have to be on both sides of the trade at all
Right.
time, right? So if the name is dropping, they have to buy. So what they're trying to do is they're trying to push it to those big limit orders because they know that will eat up some of the overhead supply.
Right.
So they're getting involved. I bet you the market maker right before that massive order probably got long a whole bunch right under it. Like they're saying, I have to buy the Qs because the last few days the Qs have been selling off. That's my job. I have to be a buyer for every seller and a seller for every buyer. So what I'm going to do is I'm going to push it to levels that I think retail has stop losses at. And I'm going to then push those because institutions don't trade with stop losses, right? Warren Buffett doesn't have a stop loss on his account, right? They're buying these things forever. So they're looking for areas that retail. So they're smart enough to know on the Qs, I think is a perfect example. They didn't need to see that there were stop losses out here. They can just look at the chart and say, I bet you there's a whole bunch of prop traders like us. I bet you there's a whole bunch of people out there that have their stop loss orders below that price. So what I want to do is I want to push it to that price because I have to buy. So I want to buy as things drop. I can start to get involved in that price. So that's why they're always hunting liquidity, is because they're looking to get filled. And same game is getting played not by the market makers, but by the institutions. If I am Renaissance Capital and I'm trying to buy millions and millions of shares of the Qs, I'm going to play the same game, right? I'm going to have liquidity hunting algorithms that are looking for, I can't see the stop losses, but I can see levels, and I know where retail traders put their stop losses, high of day, low of day, all the things they're taught by the kind of the gurus out there. And then I'm going to flush those levels, and that's how I'm going to get filled in the trade. That's how I'm going to go.
Really quick here, just because it's linking what you're saying. On the tape here, I'm seeing a big order coming in below, but it looks pretty supportive. I would expect it to come down, transact some of this, probably hold this big chunk here, and then probably go off, push off of that. So I will be looking to take another quarter of my position off here. As soon as I see that kind of transact. So I really appreciate you clarifying some of this, because I think that it's there's a lot of kind of cargo cult behavior with traders, especially retail traders, where they're intuitively seeing the correct thing, which is that there is some stop hunting activity, but they probably personify it and they think it's happening to them personally, and all that kind of stuff.
So the thing is also is that I mean, it's a collection.
I took another quarter off of my position. Sorry to interrupt.
It's a collection of orders in an area, right? And it's not the thing that to remember, right, is when your order is in, it's ordered all at like on the level 2, right? Just level 2 overall, right? When you see level 2 at 1101, it's not saying that Michael's in at 1101. It's just saying his order is there, right? And all the orders that are there, right? So that's the understanding there. That's why traders think that they're getting hunted, because they're all.
You don't understand. It says Justy Trades, and they.
That's exactly what it says. That it has a little face. It has a little face, and it says, "Smack it, smack it, smack it, smack it."
Well, I think sometimes. I think it's not to berate people, but I think it's an excuse for losing trades, right? People want to say, oh, I put my stop loss out there and the market maker saw it and he ran it to my price. It's like, no, he didn't, right?
Here's the thing, though. Here's the thing on that side, at least for those traders that feel that way, Michael, is that one of the things is that, and it happens often, right? Technical analysis sometimes is taught to being like this, and you take this, right? But the truth, at least from what I've seen in day trading, is if you only go on that knowledge, it just doesn't work out half the time, more than half the time, right? At least from what I've seen in day trading, right? Swing trading has been different. I can tell you guys, I have seen certain strategies just play out how they're back tested. The back tested becomes real results. And so I think part of it is that the algorithms are trained on the day trading patterns and essentially looking to wash those traders on those patterns. That's just what I feel like it is. And that's just where it is.
It's 100% correct. But the thing is, it's not like we mentioned, it's not looking for that trader. So if you're like, oh, they're flashing, I put out a stop and they came and got me. No, you put out a stop at an obvious place that the algorithm says everybody has a stop loss out there. Let's go flush it. It's why.
Let's go take it.
one of the most famous sayings out there is put your entry where most people put their stop losses, right? And that's what we're talking about with this liquidity flush type thing, is if we can figure out, and I'm still watching this, looking for how would I get in? Is it a moving average cross? Is it something? How would I confirm that a bottom's in? Because if we're still making the bet that we're above this pre-market low later in the day, then buying into this seems to be the move. We just have to figure out like the mechanics behind it. But and then to your comment of things only work half the time, that's trading, right? It's one of those things, right?
That's where I think it's important to try to combine variables, right? And that's where I think that, you know, like if you're just trading on technicals alone, I'm not a proponent. If you're just trading on fundamentals alone, I'm not for that either. If you're just trading on story alone, I'm not for that either, right? Or maybe you're just trading on the overall market itself, only that. Well, maybe that's not it either, right? I think that you have to try to combine some variables here, right? And I think that that's the hardest part.
And you'll see that across, I saw it across, again, working in the hedge fund space for 10 years. Every hedge fund was a combination of either fundamentals and technicals, or statistics and technicals, or themes and technicals. And it's
we gotta get that moment.
Clip that.
Clip that.
But yeah, it's right. The example is the.
Sorry to interrupt.
Like jiu-jitsu.
I apologize. That was
no, go ahead.
Yeah.
I just got an alert. So my stop on the last quarter of my position there was just over the 9 EMA there. So I did get. It's a soft stop. So I'm waiting for this candle to close, but the alert just did trigger. So I think that we are seeing. Isn't that? I mean, this is not tooting my own horn. This is tooting Matt's horn. But isn't it crazy how it just comes down to the ATR? My line says bear shall not pass. But like that's the level where if there are buyers, they probably step in right around there, and just like clockwork. There's a big old candle. It doesn't mean anything other than there was some incentive to buy here. We could always keep going, but it is so funny how that works so often, you know. So I am watching pretty closely here to get out of the rested position. It was a really nice trade. We caught what did we get in? Where did I say I got in? I got in on the back test of this low here. So almost a percent trade for a little scalperino. Take those.
The other way we could look at this, right, is we could just keep moving the support level down, right? The ultimate goal is that we're going to retake this level here, but I just drew out another level of support, and we could say, okay, if we get a couple closes, couple 1 minute candle closes above that zone, maybe we punch in there. That ends up pushing us again through this zone, because right, the idea is that if we can get above 492, you know, we don't have to be first in, but the stop goes below, or I think near this low. I don't think you have to put it at the low. I'd say probably 490. And then you're targeting, I'd say, high a day or higher, right? So I'm looking at these as kind of longer term swing trades. And, you know, we mentioned this yesterday. The same thing happened, right? I had this zone drawn right here yesterday, right at this level, and we undercut it. And when we came right through, I bought some TQQQ, and then after flirting back and forth with VWAP enough times, I you know, have to get a cut. But I think the target is ultimately the high of the day when you get a flush here, because I think this is something that could be translated into swing trading, could be translated into, you know, if we're going to be doing stuff with our friends over at the Fibers, this could make sense for Forex. It could make sense for crypto. The same concepts. It's just. And the reason I'm kind of harping on this so much is because, as you guys know, I'm a systems trader. That's just what it do. I build systems, I test those systems, and then I trade those systems. This is step one of building a system, right? You come up with a hypothesis of this liquidity thing. The reason that then you can go from there is because you know that you're working off an established market mechanic. You're not just saying what happens when moving average A crosses moving average B, right? That's just junk. You're saying there is a market phenomenon that I'm observing that is existing. Now that's step one. Now the devil's always in the details. Okay, so when is the official entry? When is this? Where's the stop loss? Where's the official exit? That's the stuff that is the hardest. But if we're right and this phenomenon exists, that means there is edge to be extracted here in some way. We just need to find out where that is.
Well
And
said.
these are going to be the toughest moments. I will say that, guys. That when you're having these moments where it seems like even the media is conflicted, you know what I mean? Like some people are saying bull, some people are saying bear. These are the hardest days to trade. I'll repeat that.
Yeah.
These are the hardest days to trade, guys. You have to understand that also. Know when the getting's good, when strategies are working well, and know when strategies are getting cut on both sides. What are you seeing a lot of? A lot of Twitter slowing down in the afternoon. Why is that happening? Yeah, I'll tell you why. They don't want to look. They don't even want to look. They lose and then they stop watching Twitter. And watch how even the posts slow down on days like today or days like yesterday, where some people thought they had the dip picked and then it just got washed out in the afternoon, right? Those are the moments where I feel like you can catch the most traders off guard, right? So
no doubt. And I'll be the first to say, like, stuff that I was watching, setups I was watching a couple weeks ago, they broke down. And you know, like I luckily I was, you know, not tooting my own horn, but you know, I've been catching most of this with hedges at the very least. You know, it's mitigated, but you know,
it's tough.
It's part of this game is recognizing that you're wrong and pivoting, right? And by the way, so we were lucky on that one candlestick. It did not close strong, so I held the position, and it's only a quarter left now, so it's low stress. Otherwise, I would have been freaking out there. But yeah, this thing's just cooking on down. So I think we go tag the 571, 570-ish, 200 day. It's the bottom of this big megaphone.
Yeah, big wash out there. Big wash out there, guys. Nothing coming back just yet.
Also, I am starting to really keep an eye on what I think is looking really good for longer term buys here. Do we want to? Is it too early to talk about what we're looking to purchase here? Because
I mean, in a day like today, go ahead, take the wheel, my friend. I don't have too much ammo to keep trading here. I'm pretty much about to get wiped out in Tesla here.
Yeah. So. I guess maybe I'll wait to get too in the weeds until this trade does end, because man, it keeps going. I was ready to get stopped out there. There we go.
There we go. This is the quote right here. So Walter Deemer is a legendary trader. Just posted this on Twitter, so I wanted to show you guys. Stock market will do whatever it has to embarrass the greatest number of people to the greatest extent possible. That's a quote.
Yeah, the Max Payne. That's the Max Payne trade.
Sorry, just worth noting that I think Deemer's short. Or I think he's flat and looking to go short. And a lot of the Ken Slim guys, a lot of the William O'Neill, Jesse Livermore type traders, who I love, Mark Minervini, all that style. That's my swing. You know, that's what I kind of learned on. They're all sussy right now. So we gotta keep. I like to kind of keep tabs on sentiment and different kind of baskets of traders. And you know, when they're saying I mean they're silly bullish usually. You know, they love buying every dip. Not every dip. They're not buying this dip apparently. So just worth noting. Just worth noting. They've been right. They've been right in the past week here to pull out.
Yeah,
so we are just here. We are getting, for me, this tape is starting to get overextended to the downside. We are past the ATR level, and these candles are starting to gap away from even a 9-minute fast moving average. So I think we're probably relatively close to a selling crescendo. So I'm looking for volume to spike into maybe our 570 level. Maybe it undercuts. Maybe it's 571.50. That's what I had originally when I drew these lines maybe this weekend. So we'll kind of keep tabs on it. I also have at the bottom of a big old flag type channel thing here, which I honestly don't necessarily believe will hold, but worth noting that there are some downtrend lines to catch here.
Yeah, it's not looking good, at least. And if you're feeling that the market was going to come back, well, with technology now down, and I got to refresh this, but I think it's down to that 3.4%. And there it is, guys. Just took a max hit there on TSLL in the funded account. So definitely not a good day for me. 2 max hits there, bleeding out with the trades there, guys. And I was looking for that TSLL. It was on the playbook and everything, and just got wiped out there, guys. Just quick action down there. And it was looking good. It was looking like we had it, right? We're coming back here. with the Qs going, and I saw a wick there go to 70. But that was probably an off exchange number there. But when we were getting back to the 69.40s, it was looking good there, and just complete takedown here, guys. And that's just how it goes, guys. It was doing good, now doing really bad in the funded account. But that's just how it goes, especially with the market turning, right? One thing for certain, I was playing a lot of shorts before, and I started playing some longs. And it's just how it goes sometimes, right? Now we're getting the overall trend to really look pretty ugly. I mean, SPY breaking down towards the 570s, 200 EMA just below that. After that, I mean, we start going into a little bit further of a down than a correction, right? I mean, we're at like now 6%, 10% maybe still a correction. After that, I mean, isn't 20% a bear market?
That is the arbitrary number. Someone pulled out their you know what in order to say it's a bear market.
Oh boy,
I don't know
open
why.
Twitter.
I don't know why that was picked, but yeah, that's the
the number
random
that they
number.
gave. But
Like
there you
it's
guys
like
see
your
it, guys.
guys'
Fully
imperial
transparent.
system, right?
Disaster trading today, guys.
I'm sorry to hear, but you know, these are
It's just how it
these
goes.
are rough
sometimes,
if you
man.
don't if you're just, man, you got to be dang near perfect, because honestly, I almost hit my stop way in the beginning, Mitch, when we were talking. You know, I was getting
Yeah,
cooked.
man. It's just how it is, man. And in trying to play the bounce and took the hit, guys. And that's how it goes. And it doesn't mean that it can't come back on the day. I think that's just how it goes there.
That's what I was actually going to say. I think we got to look at the close here, right? So
Yeah.
this is the zone that I was watching. Is basically the low of this gap down candle right here, because this was where everyone got really scared, and that's sitting around 575 or so. This candle here, and we gapped down, and then we just ripped to new highs in just a week. So we're below that now, but it's 10:30. So what I'm going to do when we're done wrapping up here, right? Let's go walk the dog, do all the normal things, and then come back for the close. Because if we're talking max pain theory, the thing that would probably get the most amount of people is if we close back above this line. Whatever Trump says tonight, because he's got that press conference tonight, is like the most bullish thing ever. And it gaps up tomorrow and just completely rips everyone's face off. That would be the most, that would hurt, I think, the most people, right?
Yeah,
that
and
would
then
embarrass me the most, because I would be shocked if the things out of his mouth tonight are overtly, I don't know. I'm starting to think that the market is calling BS on it, but then again, it's so, like you said, there's just so much volatility in the market. Like you were talking about, we're below the last low, right? And look at the top side of the range, right? We popped the high twice. It's a volatility expanding range, So
well, this reminds me, right? IWM before the last bear market, right? If we go back, everyone was watching this range here on the small cap stocks.
Yeah.
Right?
Looks pretty until it doesn't.
Right? We popped through, and everyone said, "Oh, that's a great pop through, a nice weekly close. It looks awesome." And then flushed back down. And then we did exactly what you're talking about. We flushed this low and then bounced for a couple weeks. So it's one of those things where this market, when it's like this, it's not like when I'm talking about this level right here on the SPY, I'm not saying this level has to hold today. I'm saying over a number of days, if we end up too far below this level, then that to me is a little bit suspect. So again, we're just seeing this break a support zone, rip through it, break a resistance zone, rip through it. The thing that hurts the most amount of people the most is just going on over and over again. And this is how the market will extract money from people. Then eventually it will trend again, right? So the way I look at it is there's kind of two ways that we could go from here. If we quickly retake this 575 up to 580 area and start to rip, I don't know, maybe back to highs. Who knows at this point? Or a little bit of a bounce, that bounce gets faded into, and then we start a trend lower. And then we just got to look back here. And this is probably good areas to look for, right? 540, 550. Still well above the last, right?
This got some room if things actually get ugly. And I do want to play devil's advocate to I think what's probably the consensus on stream, just because I'm seeing it in chat and I want to put this side of it out here. Rando
right,
mentions
okay.
that I think
I'll be right back, guys. I'll be right back. I'll keep you guys up there.
sounds good. Rando says, I think you guys are underselling Trump siding with Russia. It's a threat to the entire world. I will be honest. I try to keep the show pretty apolitical as possible and not alienate people. We're here to make money, not talk about how we feel about things, because our feelings are often wrong. It is a big deal. I do think it's a big deal. And I think that if there is systemic risk in terms of potential rumblings in terms of U.S. hegemony and our position as the global police, the world leader in that regard, it doesn't have to play out immediately. It's a slow thing. These very slowly then all at once kind of thing. Where I'm really watching OPEX and expiration this month. Just like when COVID happened, it took a while for that to kick in. And what it actually was the trigger was all of this volatility, or all of these options unpinning on I guess gamma unpinning on that quarterly OPEX. And then we just saw the bottom fall out. So if there is real systemic fear, if the market is saying, okay, we knew Trump was going to be wild, but this was not on our bingo card. If that is the actual consensus by the people, who actually matter, then that'll be the kind of window when I'm looking. That window of weakness is Jem Carson often talks about on FinTwit, VolTwit, that area of systemic weakness. And that's when I think we could see some of this actually playing out. Rando, I'm with you. It's a bad look for us, in my opinion. But I'm just here to try to to find the best plays based on that.
Yeah, well, and I just, again, as a technician and a Canadian, I couldn't care less about all the political stuff. But I just look at it as you have a metric of the fear in the market, and it's called the VIX. We are very low still. Like a 2025 VIX is nothing. This is the that Russia or Japan unwind thing, right? So that was, remember the carry trade unwind craziness? We went up to 70 and we're at 25, right? So this is, for people who don't know, I guess the calculation of the VIX is just how many people are buying puts on the market, right? How many intelligent people out there are hedging to downside risk based off of what's happening? Not very many. Right. So this is, yes, it feels bad. And I think it feels bad because we're day trading. We're zoomed into the individual charts. Right. This is why I always start everything zoomed out and say, right, we're chopping around, and this is the bear market, right? We're still at 35 or so was the normal kind of VIX spikes. And we are still well below that. 2020, we went up to 75, 80. So
and
we are,
that kind of, sorry.
No, go ahead.
Oh, I was just going to say that's kind of where I'm at in terms of market sentiment too, because people have been buying the dips so excitedly for what, 5%, 4%, So I just try to preach caution because heck, I think we bounce, but hey, if we don't, there's a lot of room, and a lot of people have not traded a bear market, in this current environment. So I don't know.
And right, we need to understand again, don't have a dog in the fight politically at all for being from another country, but we've been through this before, right? That this is not the first rodeo, right? We can go to the SPY and we can go to the last administration. It was right here. So I look at this chart and I say, this could happen again, right? Nothing happened between November 2017 and then let's say February 2019. We had 2 years that the market didn't move, but it didn't move in the most spectacular fashion imaginable, right? So I look at that when I say that I think the market's going to be range bound for a long period of time. This is what I'm talking about. I'm not talking about a quiet range down.
The classic violently flat, right?
Yeah, I think we could expect to see this. And if you just look at this minus this tick down here, this is kind of what we're seeing so far. We're seeing, right, a push to the high and then a flush back to the low and then a bounce to the high and then a flush to the low. So this, right, again, we've done this before. Nothing is new under the sun. This is the beauty of technical analysis. You can go back to like areas and see what's happening. So if we get this again, then we're going to get 2 more years of this messy market. So we have to be able to adapt to it, and we have to be able to say, all right, let's find a place that we can do as a group to buy the dip. So we're right back on here's the 15-minute chart.
I was
Nice
gonna say,
bottoming
I think that
tail.
I'm out of my short here. I think that it's time to start looking long, personally.
Yeah, even like mass here, but you guys know how that one's gone. So we'll see what happens there, but it looks good. We'll see if it recovers 330 here and actually gets a spike. We'll see if the Qs can keep going back. They are coming back a little bit here.
So yeah, we're back above. So this shaded area right here, that was the low of that gap down and rip candle. If we can get through there, that's an interesting push, and then that might take us back to this level right here, which is the pre-market low, and then from there. Because again, I think traders really should take this. I'll leave it up here for a second. Screenshot this and say, this is what happened last time. We had trade wars, we had tariffs, we had the president bullying Jay Powell on Twitter. It's happened before, right? So it doesn't mean it's going to happen exactly like this, but so far what we're seeing in the market is this. We're seeing this choppy, messy action. And again, I just think if you have such a comp to go to and say this is what happened before, I think you trade the market just like this. The news was up in arms one way and then up in arms the other way, and then this thing and that thing, and the news cycle again all happened before. This is what ended up happening. So this is kind of what I'm expecting to see this time. Ugly push downs in which I will be looking to buy relative strength, 4 bounces. And then you're going to get these wild bounces. Again, this is a weekly chart, but you're going to get these wild bounces higher. So it ends up being, if you come zoom in, this is just the start of it. Right? How much tighter is this range than that range before? So I think this could get even crazier, which right could be a nice place to make money if you're one of those people that you're sticking a move, right?
Yeah, totally. I think it's going to be an amazing traders market. One thing I do want to say, you're dead on about just about everything. The only thing that I do want to just put on people's radars is the only difference. Yeah, like you said, we've had all these things before regarding trade wars and everything. The both political and economic climate, I personally think has shifted pretty drastically since then because of COVID. I think that, for example, income inequality has been drastically altered, and I think that we are still kind of pricing in and kind of grappling with the reality that it is quite a different landscape for most people, even if the economy isn't fully acknowledging that. And I'm just cognizant of the potentiality of the market to snap back to reality, so to speak. I think it's more likely that the market keeps going up and all the poor people keep having trouble surviving, unfortunately. But again, we're here to make money, so I'm just cognizant of the potential really good deep discount buy that could be coming up this year. That's all I'll say on that. The technicals show it, right? So why speculate?
Right. And even when if you talk about income inequality, it's the rich people that own the market. Right. So as long as the rich people own the market's going to go up, right? So I think it's one of those, it gets very hard for people to disassociate. And this is why I love technical analysis, and I love what I do on the swing trading side that's purely quantitative, because you can remove all of that from it. You can just say, what's happening? Well, I'm looking at it and saying, right, we're in a buy the dip, sell the rip market. I have a number of algorithms. My trend following algorithms have done nothing for the last 5 months, but my mean reversion and my pullback algorithms have made pretty good money. So I'm just focusing entirely on those for the foreseeable future. And when we break out of this range, I will shift back to doing some trend following. But that's what we got to do. You gotta stick and move. You gotta have your area. And speaking of, if we can hold here above this zone, I think I'm going to buy a little bit of the SPY here and just put a stop at the low of the day, and then walk away and see where we are into the close, because that felt like that could have been a big flush out. So if we get above, again, we're talking, I don't think this will show up on a 15 minutes, go to an hourly chart. And we're talking these lows back here. If we retake these lows and we can hold above it, I think in my real account, this is Mitch's kind of hourly pullback, right? This is an hourly candle. So it's under this low right here. So a nice kind of pop up there and a hold. If the candle closes here green or above that zone, I think I'm just going to buy handful of futures contracts, but a stop at the low of the day and come check back in a few days. Wouldn't shock me if we're back into the 590s and ends up being a great trade.
It's not a bad one indeed, guys. Not a bad one indeed. Don't go to sleep, says Marquez. And I agree. Don't go to sleep, guys. There's still a lot of trading going on and a lot of ways to make money, whether long, short. There's both trades today.
That is
so you
good.
definitely got to be watching out there.
Mentioning McDonald's. That's a good looking little consolidation here, right? Nice gap up. Missed earnings. Market didn't care, right? Gapped up on earnings, even though it missed. It's been holding that gap ever since. I love, and we talk about this all the time, I personally don't trade off the news. If you say it's bad news, I'm not more inclined to be short. If you say it's good news, I'm not more inclined to be long. I look at it and say, okay, it looks like they beat or they missed both top line and bottom line here. But the market didn't care, gapped higher and held that gap. So it's a nice look. Boring stock, right? You're not going to get a 50% move or something in McDonald's. But when the whole market's tanking and this one's holding strong, makes sense, right? I like that one.
I think other areas to look for similar type names. The defensive names, like the tobacco names, are going insane still. But that's been some of the crazy rips on what is it? Who does Zins? Is that Philip Morris? PM? I think PM's the leader, but
PM,
yeah. This insanity continues. Like, man, I don't know what to say about those, but I do think that we need to watch these. I like coming out of the 2022 correction or bear market. I think I was trying to long Altria MO, and that breakout failed so spectacularly, and that was a big sign for me. I was like, oh yes, that means that money's leaving, risk off. We can start buying fun stuff again, fun dumb stuff, speculative. So I don't know. I'm keeping. I love keeping an eye on them for risk on off sentiment for sure.
So
let's see if we get the mass breakout here. It's getting close to that 350.
Yeah, I just in the little trading community I'm a part of, the consensus has shifted to looking for longs for the rest of the day. We caught most of the short, so now we're looking to ride it up if possible. But I think we could get a double bottom here. I'm not in a position yet, but I am starting to talk about tickers that I like. Michael, do you like any of the other space names, or are you a Rocket Lab guy?
No, I love ASTS. Rocket Lab was just for day trade.
Okay,
it was just based off that AVWAP fade. But I do like your ASTS. I have that all marked up here.
Nice.
And I like the, we want to, right? We're talking about this same setup. We were talking about it from a day trading point of view. This is what made me really like ASTS from a swing trading. Massive. Like, I think the rule set that we're going to build with this is like a stupidly obvious support and resistance level. If you got to squint, I don't think it, right? Yeah. This was an obvious support level sitting right at this kind of 21, 22 area. Bounced many, many times there, undercut it, and then just a week later ripped right back through. So that was kind of my initial, hey, take a look at this one. Now, again, just had, like you had drawn up, this area right here is super interesting.
It's just so clean, right? And if you zoom out, it's like this whole giant base. That's a handle. That's a handle on a cup, And
anything that gets to all-time highs and then just sits there for a while, it just grinds the shorts down. Just like, because they're all wrong, and they're all losing money, and they're paying interest on their losing of money. So that it's very good from a weekly chart. I love it from a daily chart.
And can we switch over to mine real quick? Because I just want to show, sure. I'm getting deja vu, brother, because this is what I see when I look at ASTS. I see hymns right here, the wedge right above the long-term cup and handle neckline. And like you said, if I got to squint, I don't want it. And this is the trade that'll got me for the next 5 years. I was considering getting in at 27, I believe. And I was like, I missed my entry. It's up 3%. I can't chase it. Yeah, lo and behold, what was the move there? Yeah, so this is the kind of risk reward I'm looking for on these space names. I think they are highly speculative, and I don't know which one will do the thing. But man, ASTS is nice. And what I wanted to note, I was talking about this weekend, the other space names that I'm watching, they're all kind of doing the same thing. They're all back testing key stage 1 breakouts. So we have this whole stage 1 cup here, stage 1 whatever range. We broke above. We're coming back, and we're getting this first look back.
Yeah.
And if we zoom in a little bit, it's pretty precision technicals. Like the first time this tapped, somebody was really interested. So I'm going to be keeping a very close eye on Lunar. They had some bullish news. I'm a technical trader. I don't know what it was, but I saw something bullish happened. Somebody was talking about it. And the last one, Rocket Lab's doing a very similar thing with the same look back to the major weekly cup kind of neckline here. So this is a sector I'm really, really bullish on. Call me a hopeless optimist. I want space cars and space rockets and living on the moon and all that cool stuff. And if it ever is going to happen, these are going to be the names that are going to double, triple, quadruple in the next 5 years. So I think that long term, these are some of the best looking names in the market. And what I see a lot of similarities on are these, these nuclear names that did the same thing. Like when something really gets trending. And we're kind of seeing the same look back here now, actually, into these necklines. So these are all the kind of risk-on names. I'm looking to see if this can kind of continue or if we are in a regime change. And if so, then these names maybe go back to the bottom types of ranges here.
Mm-hmm.
That's kind of what I'm looking at. Other momentum names like Hood. You see, all these names are back-testing key levels here. Everybody's freaking out, but the leaders are still leading, in my opinion. They're just pulling back a little bit. That's kind of where I'm at.
Yeah, one of the things, this is why it's so important to look in RKLB is a SPAC.
Sorry, you cut out for me just a second there, Mitch. What was that?
That RKLB is a SPAC, but this is why you got to keep. Yeah, I knew that was gonna hit Michael's sweet spot there. Like, what do you mean?
So much money.
But remember, Rocket Labs was actually a company that struggled
right
when they first started. Like, I could show you like events where they kind of just literally failed. Like in September 2023, their booster just went out of control. Right? Like it doesn't mean that you like they don't have to even be doing good. They just need to be in the right theme, the right space, right?
Mm-hmm.
And I think that's the important thing, right? And so I think those are all things that you need to be thinking about when you're looking into this. What's the next theme? And the reason why I bring this up is because we're getting a question in the chat also about another theme, right? About drones, right? With the RCAT, right? And so this is why it's important to know themes and know the trades within themes, right? So like I had Black Sky on there. Why? That's an imaging space stock, right? You got Planet Labs imaging space stock. And those are space satellites, right? That do imaging. Right. But you got to know the themes, right? So RCAT is, of course, the drone theme, right? And this is just how themes come into play and out of play. One of the things that I'll tell you guys about themes is that you need a euphoric market for themes to just take off to unreasonable valuations, right? Because to be honest, there's no reason for RCAT to have gone where it went to. There's no reason for QUBT to have gone where it went to, right? These are unreasonable valuations. Let's just be honest. This is why it's important to understand story. This is a story, right? This is the theme. This is the story. And then it's important to understand the overall market and how that plays into it, right? So when we're in that euphoria kind of market where you're seeing names rip, and they're not ripping based on even technical patterns or valuation, it's just hot story. And so those are the moments where, these can continue to go. But like I always say, the moment the uncertainty comes back into play in the market, these are the names that failed the hardest. And that's exactly what happened. And then we started to see even quality, or what some people will consider quality euphoria, start to break, like Palantir, like HIMS, right? Those actually had real story behind them, right? Some true fundamental change that was going on underneath the company. But even those broke. That was the sign to be careful for market correction. Like I always say, there's always a dash for trash before there's the dash for quality. And I think that's what we've seen here. It's shifted from dash for trash to dash for quality. And now you're seeing the value names come out. You're seeing value names change, growth names come off, right?
What's the saying? Trash always floats first, something like that.
Yeah, exactly. And that's what happened here, right? And that's why it's so important to understand when rotation's starting to turn, right? Especially growth and value, right? Just those two alone, right? And it webs and flows. Michael talks about it. These guys that are really invested in the market, the big boys, they can't pull all their money just out on the sideline. They push their money elsewhere. Take a look at XLP today. Take a look at Procter Gamble. Take a look at KVU, Clorox, names that we were talking about today. They're all still doing well. Why? Money's rotating out of tech going into those names for the time being, right?
Totally.
And I think that we got to continue to watch to see if that trend changes. We want to see the trend in the market change. One thing that could happen is the XLP starts to give up, right? Starts to give up some of this rally. That's one thing that I'll be looking at. And so for my eyes, for RCAT and all those, you need a positive market to see themes like that work. And so I think you still need to see that market turn back to the upside. And then, yes, you go back looking at themes that could be around for longer periods of time.
Totally.
Yeah, I think it's an animal spirits thing, right? Are people, especially investors and everything like that, are they making a lot of money and they can throw it at a hope and a prayer, which is what things like RCAT and what things like the space names and all these things are. Just a whim and a hope and a prayer that something's going to be something at some point. You don't take those kind of bets if you're worried about being defensive. You take those bets if you think everything's going to be kind of expansionary, which again is why we're seeing this kind of flight to safety. Is everyone's saying, okay, right, the market's a little bit worrisome, at least right now. So I don't even think in this choppy market you're going to see any of that, because you need to see these fund managers have new equity highs in which they're taking profits from NVIDIA. If you line up the charts, things like the quantum computing, so Qubit or Rigetti or all these names, these started to get really popular right as NVIDIA stopped going up. And it's not a coincidence, right?
Yeah,
it's like they take all their money that they made from NVIDIA, or some of the money out from NVIDIA. They're sitting on that cash. And they're just saying, well, let's just take a bet somewhere else. And now they take the money from that bet and they go do another bet, and they do so on and so forth. So it's this way of rotation. And that's why when these charts are broken, I'm not interested in buying these for any sort of long-term play, maybe some scalps here and there because they're very volatile. But yeah, it's not a coincidence that the second NVIDIA stopped going up, these names started to rip, because it was just rotation, and we're going to see the rotation happen over and over again. The only time you don't see rotation, or you see a bearish rotation, is in bear markets, right? So right now we're seeing rotation out of tech and into names like Mitch mentioned, into names like healthcare that are looking great, into safer type assets. If it's a bear market, then you see the rotation into bonds, you see it into gold, you see it into these more defensive names, right? So again, it's one of those things where we're just seeing rotation under the hood, and it looks really bearish because our darling stocks aren't going up anymore, but there'll be new darlings down the road. It's just the way the market works. It's a constant rotational cycle of just money flowing from one area to the other area over and over and over again.
Yeah, it's the always sunny meme for sure. There's a stat that I should fact check it. I think it's a Mark Minervini one of those, but something like 80% of previous market leaders will drop 50%. 50% of previous market leaders will drop 80%. Just in terms of everything. I mean, for me, why this is relevant right now is I'm telling people not to buy semis. I don't know if I'm right, but for me, it looks like a stage 4 breakdown is starting. For me, sectors can go up, trade sideways for a while, and keep going vertical. But I think that there is I don't like the risk reward personally. When I look at like the NVIDIA monthly chart, it's just top wick, and a big curling scallopy top. It's that's telling me something. And then you pull out to the monthly SMH chart, and it's like, oh, I hope that bulls are right, but if they're not, we have some room down. So personally, I'm looking at other areas of the market to go risk on. The IGV, I think it's IGV SOX ratio chart is looking very bullish for software over hardware. And if that trend does play out, then we're looking at for the next tech cycle, it looks like software will overperform or outperform. So that's just something I'm keeping in mind. But Michael, and Mitch, I wanted to get your guys' opinion on. It seems like the one true flight to safety stock right now is Grinder. How do you guys feel about that? Is that about to make a major move? It's so good to me. I'm not gonna lie.
Grinder.
It's the flight to safety, Mitch. What can you say?
I guess.
Wins.
You know.
Oh, today
what happened to the match? What happened to the match group, man? That thing's been.
Yeah, well, and that's I think, but I think that does highlight that again in this market where things aren't moving, although it feels like they are, just because it's high volatility chop. That names like this could be great. You find a company that's beating earnings over and over again. Great, right? You hide out in some individual type names, right? It's one of those. It's one of those things where again you're probably not going to get a quadruple on anything like this, but it's a nice grind higher. There's nothing to complain about. But
it's a grinder.
You guys can look at my bag and look at Genie. I already sold it, but you can look at what about sports betting?
Dude, I love this. Okay, so
across the internet, they're trying to rug pull me, guys. I'm giving too much good information.
Rug pulling your internet.
So I love sports betting. I think the whole sector was looking. I mean, it was trying to make major breakouts here.
Yeah, it was. I sold Genie. I got rid of it. So now is usually when the stock goes and boom.
yeah. Genie's so fun. I actually that was my first Wall Street Bets DD back in the day when it went from 15 to 25.
Yeah. I'm with you. I was in it before 10. I was in this when it was a holding company. So what I will say is Niccolo De Masi, you can actually just forget about my DMs, man, because I hit you up a million times. You follow me. I tried to bring you on to save these stocks. I even tried to bring them on to talk about IonQ. That guy is in pure hiding mode, man. He's been in hiding mode for like 2 years, man. He used to answer my messages in 10 minutes. And then there was just cuckoo kachoo, man. Like I could show you, man, the messages, and it's just like, okay, you're talking to me, you're coming on shows, you're doing all this, and all of a sudden, poof, gone, gone. Just like Chamath or whatever his name is. Just
I'm okay with not seeing him everywhere.
Disappears, just poof.
Absolutely. I could see less of David Sachs and all
that was my warning sign there. So stocks like that, I just keep an eye on them. RSI is another one in this space.
PENN.
Is it SGen Sports Radar? What's Sports Radar?
That's RADR, I believe. Maybe SRAD.
SRAD, right? Yeah. So that's the competitor of Genie. This is the one that did well compared to how Genie did. And the worst part is I did the deep dive research. There was no need for SRAD to do better than Genie. If you actually look at the deals, if you look at the deals, everything, the money, the underlining like fundamentals did not make any sense how SRAD was going up, but then Genie was struggling.
So you were playing around the time with the potential Disney acquisition and stuff. I figure that was a wild trade.
This was a lesson to learn, right? Yeah, it was a trade that had gone really well for me multiple times on the swing side of things. Then it became an investment look in my mindset. But another thing that I learned with this was that even on investments, you have to have that cutout and be able to get back in.
Yeah, Mitch, I was going to say,
what cost me on Genie.
I was going to say, that's how it usually goes for me too. The short-term swing turns into a long-term investment.
Yeah, especially when it keeps giving me 30% returns consistently. And it was doing it. I think it gave me like 30% returns. And I was just like, well, this is too easy. Well,
personal APM.
Yeah, I mean, you make 30% a couple of times. You start seeing those guys that are like, oh, well, I'm up on the S&P 500 10% higher. I mean, you get your 10%, man. I ain't looking for 10%. But that's just how it goes, man. And then when Genie first cracked, and I had the chance, if you look back on the charts, when it first cracked down through the 15 going to 14, I had the chance to cut it there and just get out. Instead, I stuck into it and said, hey, I see this as an investment. It could take a downfall, but I don't see it going underneath 10. And
Dude,
that's exactly what happened.
It's so in line. I did excellently on options. It's my best options trade ever. And I gave a quarter of it back. I actually more, I think like a third of it back because I was like, I'm going to buy shares with this. What could go wrong? I'm being a smart investor, That was a great learning lesson. Yeah, absolutely.
Should have just saw it was a SPAC. It was destined to tank.
Michael, I had like 1 year of trading under my belt. I thought SPACs were the future, along with a lot of other dignitaries.
It was for a while. If you didn't make money during the SPAC time, well, you missed out. Yeah, I will say that. I know that a lot of people poo-poo SPACs, but I was making 40-60% gainers like it was nobody's business.
It was insane. I'm not gonna lie, I've never felt greasier though, because some of those, it was like, I'm buying options at 10 cents. They're going to $1. Somebody buying these pieces of crap. It's not institutions, I'm just trading with somebody.
That's the first time that I ever moved markets. I will tell you guys, I was doing a show. I was on Benzinga doing the SPACs attack. And I was bringing on holding companies. And I can tell you, this was blowing me up like never before, guys. I had never, ever been on a show where literally I had to get to the point where I couldn't trade certain things because I just felt like I was starting to be like immoral for trading these things. But I
appreciate you for having a conscience, because a lot of these people, they'll be like, I'm buying this super odd dated, zero OI contract. And you guys should all too. It's like, I already loaded this at 10 cents. You guys are driving up to 20. I'm already out before the trade starts. That kind of stuff happens a lot.
Calling CCIV when everyone was saying that they were going to buy Dish Network. And I was here on the show on SPACs Attack being like, Dish Network? No one's buying that. They're going to go for something completely else. And then all of a sudden it's going to go boom. The very next day, they went and mentioned Lucid. And that stock went from like $9 to the freaking moon, man. And that's just how it goes, right? So there's always going to be speculative assets, right? And they come and go with the euphoria of the market. So if there's one thing to learn today, it's that, guys. It's to pay attention when the markets are in that euphoric sense and when they're not, right? And when things start to turn, realize that the things that don't have quality, that don't have actual fundamentals, that don't have some true underlying dynamics behind them of why they're going up, usually will run into some altitude loss, right? And that's what we're seeing here. But it also doesn't mean that these are not opportunities. And that's what Michael has been telling you guys and trying to reiterate of how essentially the market's the only place where you get a 10% discount and you run the other way. Right. And a lot of times this is also a thing that Michael has noticed over his years of trading. And that's why he doesn't get concerned so much of the downside, because if we do go into this bleed, well, guess what? Everybody bleeds, right? We all have blood and it's all red, guys. So when we start to bleed, we're all going to struggle. But it also gives you opportunities if you can be the patient trader. Looking at the monthly candles can really help in these situations. That's why you're seeing Michael, he's relying on the deeper time frame, not saying, well, look at the daily. No, go look at the monthly, look for certain lows to come into play. That's what the bigger traders will watch. That's where they're going to try to bring levels into play back into this market, right? They look at the deeper time frames. Even this is when weeklies go out the window and you move further back, right? I would even say you can even look at quarterly charts and start to look at, okay, so can we pull back a certain amount, maybe on the quarter, and then start to look to see where do we actually find some support, right? Maybe it's around the 478s on the Qs, or you're looking at the SPY and you're looking at quarterly look and you're like, okay, well, the low on the last quarter was 565. Take out that low and let's see if we come back. Things like this, right? So we'll be watching, of course, bigger time frames, talking about different trades. If you guys ever have a theme that you guys want to talk about, feel free to hit us up, because the truth is, this is how we can catch themes early We can look for that watch list to get hot later when the market gets hot again, right? And we're all looking to see that, hey, at the end of the day, the tariffs are coming in. The first thing that I actually saw in deteriorating numbers is the GDP outlook. But of course, that is just a revised outlook that it can always change, right? The tariffs are coming in. Inflation hasn't really spiked. I think that's one thing to tame the kind of the bearish out there, the bearish mentality. And it's all about corrections happen, right? And corrections are corrections. Unless we're going down 20%, it could easily just be another place to catch some dip, right? All right, guys, that's going to do it for my outlook. Of course, it's 11:01. We're getting out of here, guys. Max pain for me today. How'd you end up, Steve? Not too bad?
Oh, I'm happy with today. We caught about 3/4 of the percent for over half the position.
Hey, take it. And Michael will continue to look into seeing what he's taking some swings. I know you opened up a position off the low on the SPY there. Is that still in play?
Yeah, and I was buying a lot of stuff today. So
hey, had his buying shoes on, as they say. Yeah. And we'll see what happens, guys. Like always, stay safe out there. And if you're noticing that this market is harder to trade right now, understand, and that's why I said it. These are the days where it's the hardest to understand where the trend is going. Because the truth is, you can look to the left, you can look to the right, you can ask the best money manager. He doesn't know, right? And so that's the truth. The uncertainty is at play here. And so understanding that, a lot of times, instead of the gas pedal being hit, we need to look at that other pedal, right? We need to make sure that if we need to, in uncertain times, we go into smaller size and protection mode versus swing mode, right? Because when you're feeling like you have it, it's okay to take swings. But when you're feeling like you don't and you're starting to struggle, those are all moments that you can hit that brake pedal, right? And just understand that at the end of the day, you don't have to buy, you don't have to sell. It's okay to be patient.
Right.
All right, guys, that's do it for us. We'll be back, of course, tomorrow. Like always, guys, it's good to have you, Steve. And we got to have you more often, man. And Michael, we'll be back tomorrow, right? Hey, stick in the fight, guys. And out there, I know there's some rough days. And guess what? Best part is there's another day tomorrow. We'll see you guys back, guys. Keep battling.